to create inflation, you'd have to do it via fiscal means, literally printing money.
You're one of our final ties to the age of long ago with your study with John Hicks at Oxford. Is the geometry of another time and place, like ISLM structure and the rest of it, is it just gone? I mean, is it something that we have to move on to some new framework for our economics?
It certainly looks like that, Tom. I mean, you know, that framework is not, I mean, the Phillips curve, you know, seems to have, at least for now, vanished.
Yeah.
I mean, your guest said, look, you can't rule out future inflation. Maybe the tails have gotten fatter for reasons he described. I think that's all makes perfectly good sense. But the kind of fixed points, the anchors for a lot of these policies,
exactly,
seem to have, you know, either vanished or moved so much they're not very helpful.
Absolutely fascinating. This 5-hour conversation with Michael Spence. Francine, I'm lobbying here. Help me. 5-hour conversation with Michael Spence. The good news is we are gonna continue as well, and of course we must look at we focus on China and all the news flow that we see there. Coming up, someone away from the academics, steeped in the reality of trying to make the actuarial assumption. Christopher Ailman is with Kelsters, and this is always a joy. Without question, in the pension world, he is the most abrupt insight. Christopher Ailman this afternoon. That will be must watch for institutional Wall Street. We're with Michael Spence. This is Bloomberg Surveillance Futures, -9.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Tom, we were having a good conversation. The first part of the the 5-hour conversation we're going to have with Michael Spence, Nobel laureate and General Atlantic Senior Advisor. Thank you so much, Michael Spence, for staying with us. We were talking a bit about, I guess the difficulty of keeping economies opening whilst at the same time making sure that, people don't get infected with COVID-19. Is this really an opportunity? I keep on hearing from a lot of politicians that this is an opportunity to reset and change our economies to something more equitable, fairer. Is it really an opportunity that politicians and governments are using, or is it just happy talk and then they go on and ignore it?
No, I think there's a lot of politicians and policymakers who are serious about it, and they're right. I mean, if you're going to mount a major sort of fiscal program to buffer the shock while the economy has the time to adjust structurally to whatever this new destination is we're going to, then you might as well focus on stuff that's important. So a lot of people say, and I agree with them, focus on, you know, the greening of the economy, focus on infrastructure deficits, focus on things that, you know, have long-term consequences in terms of sustainable growth patterns. I couldn't agree more. And I think there's serious intent to go that direction.
Is Europe leading in this because of the work that the Commission's trying to do with the Recovery Fund, but also targeting climate change and, you know, a fairer finance?
Yes, I think that Europe has demonstrated significant leadership in this area. And the emergency fund, I think, you know, we hope is a turning point for Europe where they start acting as if we're all in it together. So, yeah, I'm really impressed at this European Commission and the whole operation. I think they're making major strides forward.
We're going to rip up the script here, folks. We were going to speak with Michael Spence about China, but instead, India. Professor Spence, I want to go a little bit mathy here and talk about the inertial force or the math of any kind of function, and I find frightening the persistency of the deaths, the robustness of the death vector in India. It seems to be completely different than any other nation. What is unique about India that gives such a frightening vector to their deaths in this pandemic?
Well, so there's two puzzles with respect to India. One of them is less of a puzzle, which is they're having more trouble in getting the virus under control as measured by, you know, how fast the confirmed cases are doubling. That at least until recently, the death rate in India relative to the confirmed cases has been relatively low. And that, you know, I think is not well understood. It could be reporting problems, meaning we haven't diagnosed, you know, I mean, reported deaths that really do trace to the virus.
Right.
It could be a very young population that, you know, is just going to have a lower death rate and so on. But at least I'm not aware of a definitive study that gets to the bottom of that one.
But to that point, well answered, but to that point is the real distinction here, the millions and millions of Indians, and that their mathematics of this pandemic is going to be different just because of the sheer count of the people.
Yes, absolutely right. I mean, you know, India is a good example of a highly dense country with a very large number of people who live at close proximity. They have relatively slim to negligible balance sheets to buffer the shocks. They hit the road, you know, when the employment disappears after a lockdown, you know, spreading the virus and so on. And so India is a classic case of a much more difficult trade-off between livelihood or keeping the economy running and controlling the virus. And when push comes to shove, you don't want people to starve to death, so you keep the economy running, and the virus is much harder to control.
Michael Spence, what should we do with all of this debt generated and created because of, you know, governments around the world dealing with the pandemic? I mean, should we seriously start talking about debt forgiveness?
I think for the poorer countries in the world, you know, we either should talk about it or we're going to have to deal with it anyway. Because some of this is voluntary increases in sovereign debt, and some of it's just involuntary because when an economy doesn't function very well, it tends to happen anyway. So I think for the advanced countries, you know, the answer is grow out of it in the long term. And for some of the developing countries, we need the international institutions, including the IMF, to have a big enough balance sheet and international cooperation. So we talk about debt forgiveness or restructuring.
Michael Spence, what did we learn from Italy? We talked to you in a horrific time for Italy earlier this year, and boy, has it been a long year. What did we learn from Italy?
Well, you know, Italy was an early victim of the not being ready and not realizing the virus had spread, especially in the north. So we learned that our medical facilities are not prepared for peak load issues. After that, the Italians really stepped into it. The government locked the place down, banned interregional travel. It was non-essential and so on. And, you know, are now getting credit from Italian citizens for doing a pretty good job of of getting this under control. And that lasted through the summer. Now, as I said before, we have an uptick. It's not dramatic yet. So we'll see. But I think Italy illustrates both effective responses in one dimension and the vulnerabilities that we've all had or all experienced on the other.
Michael Spence, thank you so much. Just always too brief a conversation. The Nobel laureate, the emeritus professor of Stanford and with General Atlantic as well. Coming up, he made news yesterday. We had him before that, but it's always good to speak to Jan Hatzius when he stuns market economics with a markdown on economic growth. Dr. Hatzius will join us here in the 8 o'clock hour. Futures simply deteriorate -14. The Dow futures level 26,604. This is Bloomberg.
Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. A judge has ordered the US postpone its ban on TikTok or to respond in court later today. It comes as ByteDance is seeking an injunction to temporarily block the ban as it continues to pursue a deal with Oracle and Walmart. The ban was set to take effect just before midnight on Sunday.
And Amazon is diving into the new and hotly contested market for streaming video games. Its Luna Plus service will cost $5.99 a month during the introductory period. It'll let gamers play without shelling out for expensive consoles. Amazon also introduced new spherical models of its Echo and Echo Dot speakers. And that's your latest Bloomberg Business Flash. Tom, Francine.
Oh, Ritika, thanks so much. And we're doing a data check today. And what's great about this, Francine, I don't know what's in here. It's either VUV or Krug. Maybe they even put Dom in here. I don't know. Let's do a data check right now
know, Tom.
with the
I like the cheap Italian stuff.
Oh, yeah. That's good. Let's do a data check here with the wonderful LVMH different champagnes. Futures negative 16, Dow futures negative 140. We're now up a stick on the VIX, 29.67, and I note stronger dollar this morning. Francine?
Yeah, Tom, I don't do fancy French stuff. You know me. European stocks actually falling with their futures in the U.S. Investors, again, weighing the receding prospects of an American stimulus package. And at the same time, they're looking at a global tick-up in coronavirus cases. Overall, I'm looking at treasuries nudging higher with European bonds and WTI oil steady above $40 a barrel. Now, coming up on Bloomberg Markets, Tom gets to speak about champagne with the Laurent Boyau. He's LVMH Hennessy Chief Executive Officer.
I can't tell the difference between VUV and Moet. Can you? I'm looking here and I just can't do it.
Especially in a plastic cup, Tom. I mean, you know, the world's gone mad. That interview.
This is the wedding China.
That's coming up at 11:30 a.m. in New York. That's 4:30 p.m. in London. And this is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
about 11 million jobs have returned, but there's still a deep hole.
We could start to approach an unemployment rate certainly below 4%, say 3.5% to 4%.
I think that it is likely that more fiscal support will be needed.
And so, yes, additional fiscal support will likely be needed.
I do think small businesses would benefit from more PPP support.
A lot of that is going to depend on how well we manage this virus, fiscal policy, and a whole range of other decisions.
I don't think there's as much of an imperative about a new fiscal package as there might have been in July.
The message is pretty clear from Fed officials there. Jay Powell, Richard Baird, Robert Kaplan, James Bullard on the need for further stimulus. It's not like the MPC where we have dissent, Tom. That seems to be like, all going in the same direction. And really kudos to Tom and the team for bringing us some of those really great interviews this week. Now, let's look at what that means for the markets with Cameron Kreis. He's a Bloomberg macro strategist. Cameron, good morning to you. So we're in a new phase for central banks. Does it mean that they'll be more experimental with their tools, or is it just a bit more of the same whilst watching the economy and how it navigates these rising infections?
Well, clearly they're sort of charting new paths. Bank of England, for example, talking about has already implemented yield curve control, and even the Fed obviously has shifted its policy framework. But I think it's fair to say that we're approaching the limits of what you can reasonably expect monetary policy to do, because ultimately the problem with economic activities has nothing to do with the cost of money. It's been a shock, an exogenous shock to both supply, but more particularly to aggregate demand. And that's a remedy that's best applied by fiscal policy.
But Cameron, we've seen quite a lot of fiscal policy. Can they do more given the high level of debt that a lot of countries are already in?
Well, I suppose that's the short answer is yes, because clearly the bond market vigilantes are either 6 feet under or sleeping. So the bond market is not exacting a particularly heavy toll for fresh borrowing. And if you believe this modern monetary theory, they have almost limitless power to spend until and unless inflation becomes an issue. And right now, we're still not there.
Cameron, link this into the equity markets right now. I mean, everybody hangs on your word. You put out your essay every day for Bloomberg. I want you to fold all of this pandemic discussion, all of the macro mumbo jumbo from the Federal Reserve over to how you create a bid in the market. Is it just there's a wall of money out there looking for a warm spot?
Well, I think that to a large degree has described the price action over the summer. I think certainly that equities have become, to put it charitably, aggressively valued, shall we say, at the peak a few weeks ago. And, it just strikes me that we're now pricing in risks that are sort of almost orthogonal to economic risk. And there we're talking about primarily political risks in the United States. And again, there's not a whole lot that monetary policy or anything else can do to assuage markets when it comes to electoral uncertainty.
Do you assume that corporate officers will adapt into the end of the year before Q1 to what they've observed this week? Hatsias at Goldman Sachs marking down GDP growth. The Prime Minister of the United Kingdom extending out to March. Are corporate officers with a vengeance going to adjust?
Well, I mean, I would say that in the United States, at least, they're probably more going to be attuned to what the likely trajectory of, say, tax policy is going to be, rather than sort of marginal changes in GDP growth. I mean, I think in a sense that almost the causality is backwards when you think of it like that, because ultimately GDP growth derives from the decisions that are taken by corporates, rather than corporates saying, well, Goldman's forecasting this, so I better change that. I don't think that's how it's going to work.
Cameron, how anxious are markets ahead of the U.S. elections?
Yeah, I think there's a fair amount of concern there because we don't know the outcome. We don't actually know what the policy framework will look like depending on who wins. And we don't even know when we'll get an outcome. And I guess if you want to be real dismal, you could say even if we have an outcome, we don't know with 100% certainty whether the transfer of power will be smooth, given some of the remarks from the White House recently. So, listen, I think ultimately it's much healthier to build in a risk premium now and to have those risks not materialize in the future than it is to sort of whistle past the graveyard, as it were, and assume that everything is always going to be rosy and then get broadsided with some sort of political shock in a few weeks' time. So I would characterize the sort of volatility and the risk premium that's being built into the marketplace as markets functioning properly rather than some cause for distress.
But so how do you play that, Cameron? Do you buy VIX or do you buy something else?
Well, I think the VIX market's quite interesting because for the entire year, say the October VIX future was trading above the November future. And it might sound perverse, but that actually reflects volatility to the election because the VIX the VIX refers to sort of options with a 1-month maturity. So the October VIX settles in, I think, the third week of the month. And so 1 month, the options that it's referring to cover the election. But what we've seen more recently is November contracts trading above October contracts. And that, I think, is pricing in some sort of risk that the election volatility, as it were, carries forward several weeks after the actual voting day. Now, I would also say that the VIX has, throughout all the summer, has remained relatively elevated relative to the actual delivered level of volatility. So I'm not sure if VIX is really a fantastic investment opportunity at the moment, insofar as we've had a significant uptick in realized volatility, and VIX has gone up a little, but not actually that much because there was already this risk premium built into it.
Cameron Christ, thank you so much for the update. Can't say enough, folks, about his writings. Look for them on the Bloomberg terminal and really out on all the media as well. Futures deteriorate, -14. Dow futures at -125. With our first word news, here's Ritika Gupta.
Thanks, Tom. The official global death toll for COVID-19 is nearing 1 million, but the real tally may be much higher. Public health expert Alan Lopez believes it may be closer to 1.8 million, and it could hit 3 million by the end of the year. Even in countries with sophisticated health systems, mortality details are difficult to accurately gauge. The UK and France have both reported a record daily number of coronavirus cases, but comparing the current tally with the numbers 6 months ago is difficult. Testing capacity was much lower then. Experts are looking at deaths and hospitalizations as the key indicators. They are much lower than the first peak of the virus, but they are going up again. And London police have launched a murder investigation after a police officer was shot and killed inside a police station today. The incident happened in Croydon, south of the city. A 23-year-old suspect is in custody. He was also shot and is in critical condition. It is rare for police officers to be shot and killed in the UK, which has strict firearms laws. The last London police officer killed in the line of duty was Constable Keith Palmer, who was stabbed to death in March 2017 during an attack outside Parliament. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Good conversation through the morning. Again, Jan Hatzius is scheduled to be with us, I believe, in an hour's time. Alan Ruskin of Deutsche Bank. Look for that in the 11 o'clock hour. Really good to catch up with Mr. Ruskin there. Futures -15. Dow futures -130. The VIX out of stick 29.44 as well, and some renewed dollar strength. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Good morning, everyone. Bloomberg Surveillance, Tom Keene, Francine Lacroix, a debate Tuesday. David Weston, Kevin Cirilli will be considering a debate in Cleveland with the wonderful Chris Wallace. The first debate widely anticipated, but with the news flow sort of creeps up on us. It'll be interesting to see how the Sunday talk shows spin that forward. Bloomberg Radio with wonderful replays, very valuable replays of the Sunday talk shows. For those of you sleeping in, you can hear that on Bloomberg Radio on Sunday afternoon. Emily Wilkins right now. And Emily, of course, we are going to tee up a conversation on the debate, but we can't. What we have is House Democrats in very contested districts basically knocking on the Speaker's door and saying, wake up. How much did Speaker Pelosi wake up yesterday on a needed stimulus?
Well, Tom, that depends if you want to sort of look in the short term or in the long term. I mean, the short term, Pelosi has now said that they will be working to get a draft bill with $2.4 trillion bill. Now, that's down from what the Democrats initially put forward. And they're kind of hoping by putting this number into an actual physical proposal that it might restart negotiation. Because, yeah, as you mentioned, a lot of these moderate Democrats, they're facing really tough elections. They're facing constituents who are really struggling right now. And they need to have something to go back to them with when they're doing the last bit of campaign in October and say, yeah, we're here for you. We care about you. This is what our plan is.
Well, I mean, what is the plan for the Republicans? I mean, if she brings it down enough, do the Republicans bite?
The question is if she brings it down enough. I mean, Pelosi came down to $2.4 trillion, and she has not budged since. And it's interesting. You say the Republicans, I mean, the Republicans in the Senate and even in the House, they're really, really opposed to spending more money. But then you look over to the White House and President Trump. I mean, we saw Trump tweet the other week that he wanted to put more money into this. There's a sense that if it was just Mnuchin and Pelosi alone in the room, we might have an agreement already. And so it kind of, we're watching a little bit how that dynamic plays out.
Emily, when you look at how, you know, does it directly play in the polls if there's a stimulus or if there's no stimulus, who either gets applauded or blamed for it? What party?
Francine, I think both parties are betting right now that it's the other one that winds up getting blamed. I mean, both the Senate and the House can say at this point that they've passed legislation. Both can point to the other chamber and say that they're the ones holding it up. I think to a certain degree, moderate Democrats are betting that people just look into their wallets, that they're not interested in who to lay the blame at for the defeat of Washington. They just want to see that something is able to get done.
Emily, what can we expect in the debate next week? Will this sway minds? Would it help actually with the undecided voters? Or will they be decided 2-3 debates down the line?
It all depends. I mean, at this point, I'll point out that a lot of surveys are showing that there aren't really a lot of undecided voters out there. Most people, they know President Trump, they know Joe Biden, and they have an opinion on the two of them. But we've seen Biden really go ahead and start really preparing for this debate. He hasn't had a lot of public meetings lately, hasn't really been out on the campaign trail. In the meantime, you're seeing President Trump attack the debate moderator, Chris Wallace. He's saying that he's controlled by radicals and kind of seems to already be potentially undermining this debate.
Are people in Congress worried that actually there won't be a peaceful transition of power if Joe Biden wins?
I'm not exactly sure how worried they are, but they are coming out and saying that it will be a peaceful exchange of power should Biden win. You saw Senate Majority Leader Mitch McConnell come out last night and say that. You saw a number of other Republicans come out and say that this has to be a peaceful transfer. In fact, you saw them do more than talk. They passed a unanimous resolution in support of an orderly transition of power. It states that there will be no disruptions by the president or anyone in power to overturn the will of the people.
Emily, thank you so much. Our Bloomberg Government Congressional Leadership reporter, Emily Wilkins. Now, up next, we track COVID-19 with Dr. Andrew Pekosh. He's Johns Hopkins University Bloomberg School of Public Health professor and virologist. That's coming up next, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. Palantir plans to go public next week, and Dow Jones is reporting its expected valuation is almost $22 billion. In 2015, investors valued the company at $20 billion, but as recently as this month, PitchBook valued it at less than half of that. Palantir declined to comment. Colony Capital is selling nearly 200 hotels to hospitality management company Highgate. It's part of the real estate firm's shift away from traditional brick and mortar properties. The deal is valued at $2.8 billion. The vast majority is Highgate assuming debt. Hospitality is continuing to struggle due to the pandemic. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Ritika. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us now is Andrew Pekosh. He's Johns Hopkins University Bloomberg School of Public Health professor and virologist. Dr. Pekosh, thank you for joining us. I have like a million questions, and they range from, what is interferon, which means that some people get severely sick and others don't, to how much virus do you shed if you're asymptomatic? What research are you working on to try and better understand this virus?
Yeah, there's a lot of things that are going on now in terms of understanding what the virus is doing to the person that's getting infected and how that varies from person to person. Interferon is one of the important things. We know that the virus, interferon is a compound your body makes in response to a virus infection, and usually that can slow down how the virus replicates. Viruses, however, have evolved means to limit interferon production, and there are now some new studies that are coming out suggesting that a small percentage of people who have inherent problems in making interferon are actually much more susceptible to the severe disease induced by SARS-CoV-2, the virus that causes COVID-19. So that opens up a whole new area of trying to understand the interferon response and how that may be one of the factors that's driving this different type of disease that people have after infection.
Were you, Dr. Pekosh, when you look at some of the things that we still don't understand, how much of, what percentage of the population is walking around that has COVID-19 but without symptoms, and how do we actually try and track those?
Yeah, so one of the biggest problems with tracking SARS-CoV-2 has been the fact that unlike other viruses that have emerged in the human population, this virus causes a significant amount of people to have infections that don't provide very strong symptoms, and some of the estimates can be anywhere from 20 to even 40% of infections can be asymptomatic, meaning you don't have those standard coughs and sneezes and fevers that are associated with an infection. But those people can be capable of transmitting the virus to others. So they're these, for lack of a better term, a silent carrier of the disease. So it's great that these people aren't getting ill, but we have to realize that they're still capable of transmitting the virus to others. And if you're not showing symptoms, you may not be as vigilant in terms of your social distancing and wearing your masks and other things. So it represents an important population that we need to target for the greater good, for the public health community in general, to make sure that we reduce the number of COVID-19 cases.
Is it getting less deadly, or is this just wishful thinking?
Yeah, it's an important question. We know that the medical community has gotten much better in terms of treating the more severe cases of COVID-19. So you're seeing hospitalization rates and death rates differ. Death rates are going down, hospitalization rates are stabilizing a bit. So that's telling you that people are still getting sick, but that the medical care they're getting is now better, and they're able to survive the infection more. We still don't know if the virus has changed significantly during its time in humans. There have been some studies that suggest perhaps it's gotten a little bit more transmissible, but there really hasn't been a major change in the virus yet. So what we really think is going on right now is that the medical community is better at treating, we're better at testing, we're better at identifying those cases, and now we can actually track the virus much more carefully, as long as all those things are put into place effectively, to be able to minimize the severe effects of the infection.
Do you believe, Dr. Pekosh, in herd immunity, the idea that if enough people actually get the virus, then it protects the population as a whole without a vaccine?
Yeah, so this has been an important question that has come up in many forums this year. Herd immunity does exist. Herd immunity is what we'd refer to when a certain percentage of the population gets antibodies against the virus and therefore is protected from infection. And we know that if most people have antibodies, then even the ones that don't have antibodies can be protected from infection because there's so few susceptible people around for the virus to find. So that concept does exist. How close we are to getting herd immunity to SARS-CoV-2 is actually not very controversial. We're actually very far away from having herd immunity to SARS-CoV-2. You know, estimates are maybe we've got 10% of the population at most in the U.S. that has been infected so far. That's come at a cost of 200,000 deaths. Herd immunity usually kicks in around 50 to 70% of the population. So I don't think that anybody would want to try to achieve herd immunity in the way that we've been dealing with the infection so far. This is where vaccines are going to help. Vaccines will help boost that number, and eventually we can get there. But herd immunity is not a realistic way of dealing with this pandemic at this point in time, nor will it be for the next 6 months or so.
Given what we know about vaccines now, would it actually protect people from not getting the virus, or could people still get it if they had the vaccination but just not die from it?
Yeah, and this is the critical thing that the phase 3 clinical trials are going to show us. And again, there's about 8 or 9 of them going on right now at various stages of completion. Those clinical trials are going to look for individuals who were vaccinated and tested for COVID-19 to see whether they're getting infected, and if they are getting infected, how severe are their symptoms? Because those are the 2 things we really want a vaccine to do. An ideal vaccine will prevent severe disease, and it'll keep people from spreading the virus to others. We'll probably settle for a vaccine that does one or the other, but we ideally want both.
Thank you so much, Andrew Pekosh there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg terminal for the latest information, and you can tune in every day for exclusive conversation with the Johns Hopkins expert. In the meantime, we'll have a couple of market moves. European banks are down. This is Bloomberg.
The Census Bureau has asked Congress for a 120 extension. I don't know that you even have to ask, and I think 120 days isn't nearly enough.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from infrastructure support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Effects in the economy are still playing out.
Worst case scenario is a double-dip recession.
The Treasury market is overbought if you consider the projected growth rate.
All central banks can do is print money in the end.
We know there are millions unemployed, but the unemployment stats are everywhere.
We don't have to torture the data's torturing us.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. 2 hours, 30 minutes away from the opening bell in New York. Futures breaking down on the S&P 500. Tom Keene down 25. And things getting real in Europe with the European equity market and the banks specifically, Tom, experiencing some pain.
For those of you just waking up, you've got an advantage over those waking up 2 hours ago. It has been a snooze Friday, and that has ended in the last 40 minutes, John, with its future rollover. The chart on European banking, John, is a kind of outside shock where, we're not talking about it now. It's not in the zeitgeist, but it is one of the worst charts in the world. And, John, with the stocks bank index hitting a record low, you just wonder where that folds into the system.
Hey, Tom, there's a line that I remember from the former ECB president, Mario Draghi, when he turned around and said rates have to be low now to be higher in the future. It was 2014. They just went negative. They're still there. And that's the outlook for these financials. Will we generate an economic recovery in the continent that actually leads to higher interest rates? Tom, the answer right now is no, not anytime soon.
Bring up that chart again on Bloomberg Radio, on Bloomberg Television. I'll get it out on Twitter for Bloomberg Radio. It's really an elegant chart. And this is the thing that Eric Friedman, a U.S. bank, was talking about, John Farrell. It's the x-axis of all this, whether it's a pandemic back now pushing 9 months, whether it's the European bank malaise pushing back 12 years, even 14 years. It's the duration of these agonies that we have to focus on.
Just never recovered. Exactly. 2020, the bank index in Europe down more than 40%. This week, Tom, the equity benchmark in Frankfurt, Germany. We started this week, Tom, and I said the happy talk in Europe ended today. That was Monday morning. The DAX since then, we're down almost 6 percentage points this week alone. Worst week since June 2020.
To me, it's the economy, and of course, with Jan Hatzius coming on, I think it'll be interesting with the markdown at Goldman Sachs going into Q4. How do you measure Q4 starting next week? How do you measure into next year with a mystery of what's going on in Washington?
Hey, Tom, we're talking about the equity market. Lisa Abramowitz, we've got to talk about credit. You and I have been saying credit really resilient in the face of the tech rout in the previous 3 weeks. This week, we had a change, Lisa. I think we've had about 40 basis points of spread widening on high yield. Just some cracks emerging.
Yeah, and we've seen some really big outflows from junk bond funds, in particular ETFs. The biggest high-yield bond ETF saw $3 billion withdrawn, which is the most since the February turmoil, raising a question, John, about what this signals ahead. Is this just sort of the froth getting taken off the top, or does this indicate that there has been a material shift in the economic outlook based on the fact that we don't have another round of fiscal support in the offing, and we are getting a resurgence in virus cases, John?
And what are you getting in the Treasury market? A bid with a move lower of just a single basis point on a 10-year yield. Isn't that the story, Lisa?
Yeah.
Just not much of one in the sovereign debt market right now.
Yeah, and we're looking at the data to try to understand what the next leg will be in terms of both bond yields as well as economic recovery. At 8:30 a.m. today, we're going to be getting the August durable goods orders. This will give a read on business confidence, how much they expect future orders and activity to pick up, particularly for aircraft and other types of big investments. 1 p.m., the Baker Hughes U.S. rig count. In some ways, this is a gauge of mobility, whether rigs will come back online in anticipation of people going more places or whether resurgence in virus will push more rigs back into inactivity. And today, New York Fed President Williams speaking, including to a group of younger people in Rochester about the prospects for them entering the labor market, John, at this incredibly tenuous time. This, to me, is one of the most untold stories of this entire recession, which is if you're a college graduate, if you're graduating from high school, what is your prospect, given the fact that entry-level jobs have largely been eradicated from a lot of the sectors that were traditional hirers of these new graduates?
Couldn't agree more. We'll catch up with the economics team at Goldman a little bit later in the next couple of hours on this program. Let's go straight to the price action. Things picking up. If you wanted a quiet end to the trading week, you're not getting one this morning. Equities breaking down on the S&P 500. We head towards a fourth straight week of losses. Down 25 on the S&P futures. Negative 0.8%. In the bond market, yields, guess what? We do nothing. We come in a single basis point to 0.65%. And in foreign exchange, story of the week, really. Hey, Tom, stronger dollar. Strongest week for the US dollar going all the way back to spring. Euro dollar 116.33. Remember 120 wasn't so long ago. Nowhere near it now. We're down a third of 1% on that currency pair, Tom.
The dollar strength in the last hour. It also notes Swiss franc goes weaker as well. Euro Swissy is a 108 handle, which is really profound after the 107, 107, 107 we've seen. John, I do want to point out Turkey got their act together and stunned experts with a substantial interest rate increase yesterday. So Turkish lira finally stronger.
Let's get the conversation started with Amy Wu Silverman, RBC Capital Markets equity derivative strategist, joins us right now. Amy, fantastic to catch up with you. This market, not too concerned about October or November, very preoccupied with December. Why, Amy?
Hey guys, good morning. Yeah, I mean, December seems to be the focus. You know, part of it is there is this December 14th deadline when the state electors are supposed to submit their ballots. And obviously the conversation has gone on for quite a while that we're going to have a contested election where logistics and mechanics matter a lot. You know, one nuance I would point to is this is very true for S&P and VIX, which has been pricing a higher for longer elevated volatility. This is not true in NASDAQ, and it's not true in Russell. The options term structure that we look at is actually lower in December than in November. It's flipped in S&P and VIX. And so I actually think that's pretty interesting because the market has been so much driven by this, you know, tech versus value trade that is not being reflected in those indices.
Amy, what portion of this pullback, this correction, is simply due to a bet on weaker economic growth? Does that play in big, or is it just another small factor?
You know, I think that definitely, you know, we sort of saw the market react to some of the data that came out as well as Powell's comments. If I could add a third layer to that, there have obviously been substantial option dynamics at play ever since August and even earlier, you know, referring to the SoftBank trades as well as the retail option buying. So, you know, the third factor that I see in play is also that there is this options dynamic we refer to as gamma, where, you know, it slices both ways. We saw that exacerbate the move up, and we are seeing it exacerbate the move down in, you know, look, in mainly tech names, but as goes tech, as goes the market because of the heavy weighting that it has had in the market in recent times.
You talk about tech, and you talk about how 2020 volatility has largely been focused on what you call the FANG-man stocks. I call them the FAN-MAG stocks. Pick your poison. How much risk is there to big tech if we do get a vaccine? In other words, do they potentially suffer losses or just underperform versus the rest of the index?
Yeah, it's kind of the million-dollar question. So far, it has been very resilient. One key point that we look at to kind of look as a litmus test to that answer is how an options call option prices weigh over put option prices. So those have all been inverted through the entire summer, meaning people are so exuberant on tech. We've actually now started to see that to change, in particular in the FANG mag names or what have you. And so that makes me nervous. That makes me think that if there is a reversion, it'll come hard.
Let's go back to John Maggie 101, Amy. Well, we're just very simply here. Are we seeing a breakdown of a bull market? Can you call it intermediate bear, or are you talking outright bear?
So, from our perspective, when we look at how the options went from complete exuberance to now, I would say, back to average levels, the investors who are expressing their views are starting to show more bearish sentiment. And then obviously that's sort of on a very short-term basis. So everything we look at in terms of the option prices are always sort of 1 month to 3 months. But if you look at those, we went from peak exuberance to historical relationships we never saw in terms of how bullish they were to now back to even slightly bearish. And so as we head into an election and we get to focus more on index trades as opposed to single stock trades, I can see that, turning us into an environment where people are much more focused on hedging and focused on the downside risk.
Amy, great to catch up, as always, especially this morning. Amy Wu-Silverman there of RBC on this market as we break down just a little bit. Let me run through a snapshot of things for you, cross-asset worldwide, as we get you prepared for the opening bound in New York this morning. Equities breakdown down 25, call it 26 points negative on the S&P 500, down 0.8%. Not much movement in the bond market, but that's not news for you. Yield 0.66% on a 10-year. In the FX market, it has just been all about dollar strength. Euro dollar 116.39. But don't lose sight of what's happening in Europe. The underperformance is very real. The equity benchmark in Frankfurt, Germany, down by 1.7%, Tom. And the character and catalyst of this sell-off is so different to what we saw in the previous 3 weeks when it was about a tech shakeout and basically nothing else. This is about the fundamentals now, the outlook for the economy, particularly in Europe, the restrictions around the economy because of the virus, and the character of the sell-off is no longer just about tech. It's about the cyclicals and the underperformance in Europe. And, Tom, that's a shift this week, and I would say it's dominated the conversations I've had all through the trading week.
Yeah, no question about it. And again, based on just sheer economic growth, to triangulate that for you, DXY out to new strength. This is the major trading partner currency, weighting of euros like 54%. DXY out to new record strength. Bloomberg Dollar Index, John, is not yet out to record strength. EM doing a little bit better on a relative basis. But, John, look at Euro Dollar as you do your data check. Euro Dollar really going to test those lows of 2-3 days ago.
A 116 handle right now may get to 115. Tom, I have to point out, you and I have had this discussion about how consumers might disengage. How would they respond? Not just the policies that have been announced. How would people respond to those policies? Already the supermarkets in the United Kingdom starting to ration certain items in the same way they did back in spring of this year. And let's be really clear about this. I don't think anybody should be adding panic to the situation. The government themselves have been very clear themselves that the measures being announced this week are nothing like the measures announced back in spring of this year. I think the problem right now, Tom, is that many people sit here, even with cool, calm, collected heads, and just believe the restrictions that were announced this week are just the start, and there might be more to come. From New York and London this morning, good morning to you all. With equity futures breaking down, this is Bloomberg Surveillance Live on Bloomberg TV and Radio.
With the First One News, I'm Rishika Gupta. Paris police have arrested one person after a knife attack today that left 4 people wounded. It happened near the former offices of satirical newspaper Charlie Hebdo, where Islamic extremists killed 12 people in January 2015. A trial is currently underway in Paris of people accused helping the 2015 attackers. Police aren't sure whether today's attack is related. And London police have launched a murder investigation after a police officer was shot and killed inside a police station today. The incident happened in Croydon, south of the city. A 23-year-old suspect is in custody. He was also shot and is in critical condition. It is rare for police officers to be shot and killed in the UK, which has strict firearms laws. The last London police officer killed in the line of duty was Constable Keith Palmer, who was stabbed to death in March 2017 during an attack outside Parliament. And Supreme Court Justice Ruth Bader Ginsburg today becomes the first woman in American history to lie in state in the U.S. Capitol. Ginsburg will be the first Jewish American to lie in state and just the second Supreme Court Justice. The first, Chief Justice William Howard Taft, also had been president. Ginsburg has lain in repose for 2 days at the Supreme Court, where thousands of people paid their respects. She died last week at the age of 87. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Continue to look at solutions, and I would just say it as it relates to the restaurant and broader hospitality industries, we think those industries don't need more debt. What they need is economic relief because they're shut down as a result of COVID. More PPP money, again, targeted, in this case, very targeted to businesses that have decreased revenues would be very important to saving jobs.
The Treasury Secretary, Stephen Mnuchin, there on the next fiscal effort. From New York and London, good morning to you all. Here's the price action. 2 hours, 12 minutes out from the opening bell. Equity futures are breaking down, particularly in the last 60 minutes or so. We're down 23, off by 0.75%. Not a big drama considering how much we turned around in yesterday's session stateside. But in Europe, we break down on the DAX by 1.8%, on the CAC 40 down by a similar amount. Over in Italy, off by 1.5%. That's where the pain is. In the euro, it captures the story just a little bit. Euro dollar 116.33, down a third of 1% there. In the bond market, story all week. I think I said get me a Red Bull yesterday, get me 2 this morning. Yields coming in not even a basis point to 0.66% on a US 10-year. And I have to say, Tom, this conversation around the fiscal effort is absolutely bizarre. Secretary Mnuchin said if the Democrats are willing to sit down, I'm willing to sit down. House Speaker Nancy Pelosi said we are ready for a negotiation. Then House Democrats are basically coming out with a $2.4 trillion package, Tom. I'm not sure what kind of negotiation that is.
Well, it's a negotiation of desperation, and right now, John, we're going to put some focus on it. Kevin Cirilli knows that every vote matters, and it was 8,000 votes in the 3rd District of Iowa that led to a massive upset of David Young, the Republican, as Cindy Axne took it. Kevin Cirilli, did I hear the knocking on the door yesterday of the Speaker's chambers as the Congresswoman from Iowa said, "Wake up, let's go"?
Yeah, I think you did. And I think that's precisely why Democrats likely next week are going to pass this $2.4 trillion fiscal support bill. And it gives Democrats an opportunity to say that they've lowered by $1 trillion their threshold and that they are willing to have some type of negotiations. I was paying attention to Senator Ben Cardin. He is a Democrat from Maryland, and he said that, realistically, it's going to be unlikely that there be any type of deal before the election. Now, I've got my eye on December 11th. December 11th is when the continuing resolution expires, the short-term resolution. So there's a fiscal cliff, so to speak, coming up in December in the lame duck. That's likely going to provide a lot of momentum for there potentially to be another round of stimulus. Because remember, the airline relief, the student debt relief, the small business relief, the energy sector to some extent, all of those other programs that have been left over from this stimulus that people are still utilizing, that's set to end at the end of the calendar year.
Kevin, Connor Lamb of the 18th District, Pennsylvania, 1,000 votes, maybe 2,000 votes. How many Cindy Axnes or Connor Lambs are out there?
Well, and that's where the economic conversation and the fiscal conversation really is on a collision course with the Supreme Court, as well as with to a lesser extent healthcare and other issues that are going to come up in Cleveland on Tuesday at the presidential debate. Because for Connor Lamb, I mean, the economy in his district is obviously something at the front and center of many of the swing voters who elected him into office. But Democrats are also trying to mobilize here. And I would note very quickly that after the confirmation of Justice Brett Kavanaugh, Republicans picked up seats in the Senate. Meanwhile, Democrats picked up seats in the House. So there was a polarizing effect after the confirmation of Justice Kavanaugh, and Republicans feel and strategists feel that a Supreme Court pick helps them in the Senate. Obviously, it's a jump ball in the House.
Kevin, our job is to take all of the political noise, the political circus, and try to distill what matters to markets. And Kevin, you're so good at that, and that's why we keep harping on the fiscal support package that is or isn't forthcoming. And we're talking about this $2.4 billion plan that Democrats put out. It is a Democrats-only plan. It is far away from the demands of most Republicans. It's dead in the water, isn't it?
Before the election, yes. And I don't like doing the estimates as the analysts do, but I would say there's about a 20% chance that there'd be fiscal support before November 3rd. I would say that those chances dramatically increase above 50% to get fiscal relief by the end of the year, sometime after the noise from the presidential election settles and before and around the timing of December 11th. I think that even beyond that, in the first quarter of next calendar year, based upon the conversations I have with the Biden campaign line, as well as even with sources in the Republican Party, that they're likely around March would be another conversation about additional fiscal support. The noise is pretty loud coming from the central bank. I think when you hear the top officials at the Federal Reserve saying that there needs to be some more fiscal relief, that catches the attention, that catches the ear of people like Senator Pat Toomey, a Republican from Pennsylvania, who is very fiscally conservative, but also could be the next chairman of the Banking Committee. And I think that those types of Republicans are definitely paying attention. Congressman French Hill, who we talk to frequently as well, they understand that there needs to be some more fiscal relief. It's just they've got to get through the noisy season between now and November 3rd.
The other noise that's been going on in Washington, D.C. that has the market's attention is President Trump saying that he would not necessarily commit to a peaceful transfer of power. Republicans yesterday coming out and very strongly saying they commit to a peaceful transfer of power should it come to that. How big is this fissure right now between the Republicans and President Trump?
I was thinking about this when I was on a run yesterday, because this reminds me so much of when President Trump, then candidate Trump, threatened to run as a third-party candidate should the Republican Party not fully support him in what was a very crowded 2016 presidential field. And so what you're seeing now, I think, is an opening argument, so to speak, and a preparation of sorts for Republicans as well as for the president's coalition around the country, that this potentially, keyword potentially, could be a very litigated election process, and both of the campaigns are preparing for a legal battle that could end up all the way to the Supreme Court. And oh yeah, tomorrow in the 5 o'clock p.m. Eastern hour, the president's set to name who he would like to see replace Ruth Bader Ginsburg.
That's how Tom and I used to prep for this show as well back in the day, Kevin. We'd go for a quick run together through Central Park. Do you remember that, Tom? When we used to live together, we'd pop out together, we'd go for a quick run. We'd get across the road, he'd pull out 2 cigars and we'd sit down.
I'm just trying to keep up with you.
And then he'd wait 40 minutes. He'd wait 40 minutes and stumble back into the building and pretend he got some exercise. Kevin, it's great to catch up. Kevin's still really down in Washington, D.C. Get a bit of water, pour it over his head, into his hair, just pretend he's sweating a bit. Does Mrs. Keane watch this? Does she listen to this still, Tom?
Us? No.
Is she listening? No?
She's getting ready for Kelly and what's his name? No.
Okay, good.
No.
So get to the price action. A couple of hours out from the opening bell. Equity futures breaking down a little bit on the S&P 500 this Friday. Heading towards a 4th week of losses on the S&P. I know, it's a killer. It's a killer. Especially when you're about halfway through that cigar. In the bottom market, 0.66% on 10s. In FX, euro dollar breaking down to 116.35. This is Bloomberg.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
From New York and London for our audience worldwide, this is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Your price action as follows this Friday morning. An equity market heading for a fourth straight week of losses. On the S&P, we're down 22, negative 0.7%. 4 weeks of losses on the S&P 500, potentially. And in the bond market, we have gone from the end of August at 72 basis points on a 10-year to 66 basis points with a 4-week sell-off in the equity market. Just a 6 basis point move. Just get your head around that. That's the conversation right now around portfolio construction. That's why this question matters. What role does Treasuries have in your portfolio? In foreign exchange, the euro just capturing the concern about the outlook for the European economy with the COVID restrictions coming through in places like the United Kingdom this week. Euro dollar 116.35, coming down 1/3 there. Tom Keene 120, feels like a lifetime ago for foreign exchange traders right now.
Yeah, there's no question about it, John. I love what you say there about portfolio construction. Frankly, into Q4, that's going to be the huge story. How do you construct it? We've heard others say you look at intangibles, you look at tangibles rather, or real estate, whatever. I don't know. I mean, I don't know how you construct a portfolio without a bond anchor to dampen equity vol. We will see. Right now with futures negative 23, down futures negative 221. This is a joy. Nick Benenbrook has done the one thing impossible. I remember this very clearly, I'm going to say 10 years ago, where he was FX Strategist of the Year. That's no big deal. He got a red Ferrari and looked great down in New Zealand. And then he did it again the next year. And that is absolutely impossible. You don't do that 2 years in a row. Nick Benenbrook did that, just extraordinary. Of course, at Wells Fargo and FX Strategy and International Economics as well. Nick, I want you to give me a dollar vector right now. I've got DXY out to new recovery strength this morning. Are you still looking for a weaker dollar all in?
Well, yes, all in over time for sure. I mean, it all comes back to what's happening with the global economy and do we still think we're in a recovery phase? And I think the answer to that is yes. Now, we're going to have bumps along the road, and we're clearly seeing a huge decline in the equity markets. But I think so long as we're on track for recovery and we eventually get a hold of the sort of the vaccine and the COVID virus, we would expect a weaker dollar and stronger foreign currencies over time.
I look, Nick, at where we are. We're going to work on the audio here as well with Mr. Benenbrook. But I look, Nick, at the dollar dynamics that we see right now. Jan Hatzius is with us later with a GDP markdown. On an international basis, do you see tepid economic growth, or can it be China to the rescue?
Well, our GDP forecast is quite good for 2021. We're looking at 6% GDP growth. And I think it's going to be moderate. I wouldn't call it tepid. China, for sure, is leading the way. And, of course, I think there's a silver lining. If growth does disappoint, there's always the chance that policymakers, including the Federal Reserve, for example, could ease policy further, especially with this new approach that they have. So we do think that policy, monetary policy, fiscal policy will remain supportive, should eventually help equity markets to stabilize, and that will probably be the factor that sees the dollar return to its declining trend.
It is 2020, and that means we have some technical issues, as always through much of this year, establishing a connection with our guest. Nick, we're going to re-establish that connection, but Tom, isn't that the truth? That we have difficulties all around the functioning, programs like this, the way the city works, how people get back into business, into the office again. And I think this week was a real change, Tom, to hear the Prime Minister of the UK talk about 6 months, 6 more months.
Right.
That was a real wake-up call for most of Europe, not just the United Kingdom.
Well, there's no question about it on supply and logistics as well. And you also fold into that the trade tensions visible. Now, we don't know what the election outcome is going to be, but you just really wonder when you fold in unilateral decision-making in trade, how that folds into the pandemic. And let's be optimistic, a pandemic recovery. And then with that, do you get unit regrowth in trade, forgetting about, John, what price dynamics do? I mean, right now, it's just almost like volumes of trade is the issue, and so much of that is scarcity, and it's going to be interesting to see. We're seeing scarcities. There's no question about that in the U.S.
Well, on scarcity, Tom, and on supply chains as well, let's think this through. I think that certain politicians and certain governments feel emboldened now to pull back and work through supply chains and shift them even more, because they found themselves not at the mercy, but highly dependent on one country for a whole variety of goods, specifically the pharma industry, and that country was China. And I think for a lot of people, there was more fuel for their argument that a lot of that needs to come home. And Tom, I've spoken to a lot of people that think there's a new industrial policy coming for many countries that will push to onshore some of those industries once again. That will take a bigger strategy, but you can already start to hear it down in Washington.
Well, unless you get economic recovery, there's no question you're going to get that. John, I want to switch to your observation of a number of minutes ago on portfolio construction. I don't think a lot of our viewers and listeners understand the dampening, the constructive dampening you get with a fixed income allocation. And that mathematics is out the window with a nominal yield where it is, and of course the horrific real yields that we have.
Well, Tom, let's make it really, really simple for a lot of people outside of the institutional world, and maybe they're just frequent listeners, watchers of this program. When equities break down, the bond market typically provides that offset for you, that support, that balance, that 60-40 portfolio. That's what most people are talking about, 60 equities, 40% into the bond market. People are questioning that repeatedly, Tom, because they believe, given where Treasury yields are right now, there isn't enough downside to offer you that counterbalance, that protection in the portfolio. Tom, my question for the people that have the doubts about Treasuries would be as follows. I understand in the last 4 weeks we haven't picked up much of a bid, but I do remember 8 years ago, 9, 10 years ago, having the same conversation around the bond market, and the German debt market carried on rallying, and yields carried on moving lower.
Yep.
So I don't want to doubt the ability of the Treasury market to rally too much, Tom, but certainly the price action of the last 4 weeks has backed up the argument that the support won't be there in the way it used to be.
There's no question about it. And Lisa, you see it with the record tights. I mean, that's the jargon, folks. All you need to know is Lisa's World high yield and IG, it's priced to perfection, and that leads to distortion and distorted signals.
Well, and perhaps not. I mean, one thing that when you guys talk about the 60-40 portfolio, the dollar has actually been the ballast of the portfolio, ironically, John, even though the turmoil is stemming from the United States.
I would agree, Lisa, and that's where people have been wrong. They've been right on the Treasury market, the consensus view that we wouldn't get the rally there. We haven't so far. Where they've been wrong, when things hit the fan, people buy the US dollar. Happened in March, it's happened again right now. Nick Benenbrook of Wells Fargo is back with us, I'm pleased to say. So, Nick, let's build on that. So many people out there doubting the dollar's role when things hit the fan. Excuse my language, Nick. But is that going to be the story for the time being as well? Do you still believe in the dollar's role in that environment?
Yes, I think so. And you know, although we think the dollar will soften over time, as you mentioned, there are a few technicalities we need to get through over the rest of this year. One is this pretty sizable correction that we're seeing in the equity markets. And of course, there is some focus around the, shall we say, the uniqueness of the election, the presidential election that's coming up, and whether or not we'll get a result on the night of the election or whether it'll take a little while after that. So
I think all of that uncertainty is playing into this temporary strength. And so although, yes, we do think the dollar softens over time, we think it'll be stable, maybe even slightly stronger over the next several weeks, but we would definitely view that as a selling opportunity, at least in the longer term.
Well, right now, there's also a challenge to the narrative that took hold over the summer that the euro was offering a comparable offset, perhaps, to the dollar, this idea that the fiscal union was getting closer, more closely integrated. Is this narrative being basically challenged or turned on its head right now?
I would say perhaps market-wise, yes, but I'm still a believer in terms of the policy response of the European Central Bank and also the various governments. If you look at, say, Germany, France, Italy, they are all countries that have instituted measures at the national level in terms of fiscal measures. And I think still the European-wide rescue fund is going to be important over time. So for me, the policy fundamentals, both monetary policy and fiscal policy, are supportive overall of Eurozone economic recovery, even with some of the disappointing economic figures that we've seen from that region recently.
Nick, good to hear from you. Appreciate your patience this morning. Thank you, sir. Nick Bellenbrook there of Wells Fargo on the FX market. Euro dollar 116.34, session lows. In the equity market, the bank index, the sector over in Europe right now, all-time lows, Tom Keene. Intraday record low is what we kissed around about an hour ago. And I think the big issue here, Tom, just to get this out, because I think it's really, really important. We have not generated a recovery good enough in Europe to have higher interest rates since the financial crisis. Why will this time be any different? At a time when the Federal Reserve is basically communicating they won't be hiking rates out to 2024. Now, if you can't generate a recovery that's not good enough for higher interest rates, what hope does the banking sector have to turn things around in the way they couldn't in the previous 10 years?
I'm going to go all David Folkerts-Landau with you from Deutsche Bank, of course, and he has been heatedly against this experiment. And, John, I don't know, it's an experiment in what, 12 years? Make it 13, 13 years that we're coming up on. And the bottom line is on the x-axis, it ain't working. And you see that in these book values of these banks. I would suggest if you had those European banks, John, away from the society of Europe, over in the more rough and tumble United States, there would have been a merger frenzy years ago. We just haven't seen it.
Well, we've started to hear about it a little bit more.
We're starting to hear a little bit about it this week, yeah.
2014, that's when rates went negative in Europe at the ECB. They stayed there. I can only think of one central bank that went negative and got back out, and I think it's the Riksbank in the last couple of years. Tom Keene, once you go there, it's so difficult to get out. And when you hear central bankers say that phrase that I mentioned earlier on in the show, that rates have to be low now to be higher in the future, someone show me that's true outside of the United States, because from what we've seen in G10, difficult.
The heart of the matter of this, folks, is it's creative destruction and trying to ignore it. And as John mentioned, the Chancellor of the Exchequer really pushing this week towards some form of creative destruction. John, I'm going to go back to a conversation I had with Secretary of the Treasury Geithner, actually in our Bloomberg basement a million years ago, about just quarter to quarter to quarter avoiding clearing the markets of zombie banks, zombie industrial companies, and zombie simulcasts on TV and radio.
Is that what this is? A zombie simulcast? You're selling it this morning.
I'm selling it. Not today with futures at -17. I just wanted to get that in there.
Futures bouncing back just a little bit. I'm pleased you got that in there. Down 0.5% on the S&P. Here's a snapshot of the price action this Friday morning. Cross-asset worldwide. Equities softer in the United States, bouncing back a little bit. The volatility, the whipsaw of the last 24 hours, phenomenal. We'll continue to discuss it through this morning from New York and London. Good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. London has been placed on the UK's national COVID-19 watch list as an area of high concern as cases continue to soar. A group representing the capital's councils is calling on Londoners to abide by the rules set out by Prime Minister Boris Johnson earlier this week. Those included working from home where possible and keeping to the rule of 6. Leaders across Europe are grappling with how to bring the coronavirus back under control. Paris police have arrested one person after a knife attack today that left 4 people wounded. It happened near the former offices of satirical newspaper Charlie Hebdo, where Islamic extremists killed 12 people in January 2015. A trial is currently underway in Paris of people accused of helping the 2015 attackers. Police aren't sure whether today's attack is related. And Russian President Vladimir Putin is calling for an agreement with the United States to promise not to engage in cyber meddling in each other's elections and internal affairs. But U.S. officials say the Kremlin has already tried to interfere in November's presidential election. Bloomberg has learned that Russian officials are growing increasingly worried about the prospect of a Joe Biden presidency and what that would mean for sensitive issues, including nuclear arms. Teenage environmental activist Greta Thunberg is back. The 17-year-old joined fellow demonstrators outside the Swedish parliament today to kick off a day of socially distanced global climate protests. Thunberg began her solo protests in 2018, and students around the world soon began following her lead. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions. We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Ultimately, this is a medical
situation, medical challenge for the economy, for society, and ultimately for the equity markets.
We'll talk to a doctor in just a moment. David Costin there of Goldman Sachs, the chief equity strategist from New York and London this morning. Good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro, counting you down to the opening bell about 1 hour and 43 minutes away, with equity futures shaping up as follows. A little bit of a bounce off session lows on the S&P 500, but a breakdown nevertheless, down 16 points and off by 0.5% on the S&P. The pain has been in Europe through this week, that's for sure. Euro dollar 116.39, coming down another 1/3 of 1%. But here's a chart of sterling that I'm looking at right now. Cable turning around a little bit, now unchanged on the day to 127.43. The outlook for the economy in the UK, not great this week. It darkens. But we keep getting some good noise on the European side of things, Tom. I don't know what you think of this headline. The UK had useful exchanges with the EU in recent weeks. That line coming from a government spokesman.
John, that headline could have been written 6 hours after I left the Brown restaurant the day after Brexit. Could have been written 4 years ago. It's been used over the last 5 years. Yeah. But that's the story right now. A little bit of pound strength off the bottom. There we are, and that is the markets, and we'll keep you abreast of this. We've got a little bit of recovery, as John mentions, negative 23-ish down to negative 17 on futures. It is now time to go wonk, because one of the great problems of this pandemic is simple, sometimes incorrect, sometimes accurate, but nevertheless just simple explanations. There is nothing simple about what the acclaimed University of Washington in Washington State in America is doing in microbiology. It has been decades of excellence, and sequestered at University of Washington is the Fuller Lab. That's literally what it's called, the Fuller Lab, and we are thrilled. It's truly one of the world's experts on this alphabet soup of DNA and RNA and mRNA vaccine research to join us this morning. Deborah Fuller, thank you so much for rejoining us. What is the progress made at the Fuller Lab, and for that matter, at other RNA, DNA labs in the last number of months?
Yeah, we have made a lot of progress in our vaccine candidate. We demonstrated success in preclinical studies, and that's in animals, demonstrating that the vaccine is able to induce protective levels of antibody, and that vaccine is scheduled to enter into phase 1 human clinical trials at the next month, hopefully. The other vaccines, of course, the front runner in terms of mRNA vaccines is Moderna, which has a phase 3 clinical trial that is still in progress, and they're anticipating to be able to look at initial results of that in terms of efficacy of the vaccine sometime in November.
We are miles beyond David Baltimore in the 70s. We are miles beyond the 90s and the miracle of figuring out RNA. Should we use the same timeline now for vaccine development that we used decades ago, or is there a new timeline that you can inform us on?
Yeah, the timeline is accelerated for development of a vaccine in this era of a pandemic, and that, has been really, accelerated due to basically overlapping the phase 1 clinical trial. So you're starting your phase 2 before the phase 1 finishes, and your phase 3 before the phase 2 finishes. So, and what they're starting them at is when they have enough data to show that they're meeting their criteria in terms of safety. Now that we're entering into a phase 3 trial, they need to show two things, both safety as well as a benchmark for efficacy. And so they, are going to be looking at early time points in terms of, how many people have become infected. They kind of have a ticker that goes on, and when they have, say, 150 or 200 people infected in their phase 3 trial, they're going to look at that data, interim analysis of that data, and determine, do we have more people infected in the placebo group than we do in the vaccine group, and how many more? Is it at least 50% efficacious in this early look? And if they do, then they may be going to the FDA and potentially requesting an emergency licensure of that vaccine.
Dr. Fuller, in the meantime, we do not have a vaccine, and we probably won't get a mass distribution of said vaccine, if we get one this year, until well into next year. In the meantime, was it a mistake to allow colleges, universities to reopen?
Yeah, I think that, that even when you take forward the most cautious measures in terms of wearing masks and, recommending hand washing and social distancing, I think it's very difficult, particularly among the young people, to adhere to all of those requirements. And I think the colleges have done their best in terms of, trying to enact all of the conditions to, recommendations. But it's really left to the individuals, to as a group, as a population, to adhere to those standards. And if they don't, this is how the virus spreads, by not adhering to those.
Dr. Fuller, I mean, in fairness, everyone's getting tired of this, right? Nobody wants to keep just sort of keeping distance and wearing masks that are uncomfortable, though it is important to continue to do so. And you're seeing people get more lax around the city here. And I know in London, John keeps talking about it. And we're starting to see resurgences of viruses in parts of New York City. London has engaged in further restrictions. Are we entering into a really substantial second wave or third wave in the next 3 months?
I think we can. It's just this is just people are getting exhausted, and but it's important that we have to hold the line, continue to hold the line with the weapons that we have to fight this virus, and that is masks, and that is social distancing, and keep holding that. With the vaccine coming on eventually, hopefully before the end of this year, that can help to accelerate shutting down the pandemic. But we're still going to have to maintain these practices. So it's just something we're going to have to get used to and work together as a population to help shut this, this basically it's like an alien invader, and we need to work together to be able to shut it down.
Dr. Fuller, thank you so much, and thank you for your research. Deborah Fuller, leading research at the University of Washington School of Medicine. John, we got to get back to the markets where, I'm sorry, the dollar is really front and center for me. What a recovery. In some indices out to new highs, but in others just buttressed right up there on dollar strength.
Bounce back on equity futures. The S&P 500 now down just 12 points to negative 0.4%. Story of yesterday for me, Tom, was just a massive turnaround we saw in a really small amount of time on the S&P 500. Gap lower, bounce back on what? I've got no idea. And a feature of the last 4 weeks, regardless of whether it was about tech, whatever it might be about, was just the volatility, the heightened volatility. Do you remember the volatility, Tom, of a few years ago, single-digit vol?
Yeah.
It's a story of a long time ago, and I'm not sure when it comes back.
This is the world of Dean Kernet and others that really look at vol here, and you just wonder, on the average folks, which is 19 to 20, and of course, as John mentions, low vol of 9, 10, 12, 12, 12, 12, 12, you wonder where that new level is, John. I'm not quite sure.
Let's get a snapshot of the market this Friday morning. In the equity market, we bounce back on the S&P 500, negative 12. It gets better as the session grows older. We're down just 1/3 of 1%. In the FX market, euro dollar 116.34, off by 1/3 of 1%. That's a weaker euro. Still a snooze in the bond market. 0.66% is your yield on a 10-year. Could have said that every day this week, I think. From New York and London, this is Bloomberg.
Decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en una 50 personas y en la otra otras 50. En cada casa había 5 habitaciones En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Worst case scenario is a double-dip recession. It's not our base case, but it's a worst case scenario.
The Treasury market is overbought if you consider the projected growth rate.
All central banks can do is print money in the end.
We know there are millions unemployed, but the unemployment stats are everywhere.
We don't have to torture the data. The data's torturing us.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Ethan Harris of Bank of America with, without question, the quote of the week, maybe the quote of this third quarter. The data is torturing us. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. It's a simulcast, Bloomberg Radio, Bloomberg Television. John Farrow, particularly handsome in London now, preparing for Arsenal Liverpool on Monday. I mean, John, we got to talk about the markets. Jim Paulson here on the equity markets. Yana Hatzius at the bottom of the hour. And come on, Lisa's not focused, John. She's focused on 3 p.m. Monday afternoon.
I was just shocked about how kind you were being to me at the top of the hour. We'll get to Lisa's excitement in just a moment. Let's get to the turnaround of this equity market.
Turnaround,
S&P
absolutely.
500 futures, Tom, a bounce off the low. In Europe, we're still down and down hard on the equity benchmark in Frankfurt, Germany on the DAX. We are negative 1.5%. And the banks, Tom, I think the banks in Europe are down for a 7th straight session. It's a tough ride for the financials when the outlook for the economy is not looking good and the outlook for interest rates is just low, low, low for a long, long time. And maybe, dare I say, for even longer, given what we've seen in the last couple of weeks.
The chart of European banking, folks, is institutionally a disaster. There's no other way to put it. That's not editorializing, and it's got to be a major theme into Q4. And, Lisa, that goes to the energy here on New York Wall Street and how banks and how global Wall Street maybe will right-size into Jan Hatzius' slower economy.
Yeah, and how do you right-size at this point, given the cuts that have already happened? You move more to tech. You have more working from home, which we see an increasing number of them doing. Look, Tom, the sort of conundrum here this week is there's been a shift in mood, and it has been marked. It is different than the tech sell-off. This is a deepening of the angst without another fiscal package from Washington, D.C., about whether these over-leveraged companies can sustain their growth. And you saw that just start to take hold in credit with riskier debt, seeing a bit of a sell-off and the biggest weekly outflow going back since the peak of the angst in March.
John, we're so lame here, and I got to go to your real yield. Look, folks, for the real yield this Friday worldwide and into the weekend. John, I'm looking at 3, and I have to go out 4 decimal points on yield to say to you that yields have come in this morning.
Treasuries haven't done much. Is that the story?
1.3961 on the 30-year bond. I mean,
couldn't agree with you more.
There it is.
Total snoozer. Talked about it through the week.
I mean, it's total snoozer, but even here, yields come in. 2-year yield 0.1289 as well. Looking at the data before Jim Paulson, futures -8, Dow futures -109. John, that Dow level 26,610.
Oh, yeah.
I'd bring that to your attention. In the
Why
fix.
would you do that?
Why
would you do that?
I just wanted to
you
do
like that
it for
price-weighted benchmark of your childhood?
It is the childhood of America. We use the Dow, John, as a benchmark in our day-to-day lives. Even the President of the United States does that. VIX 29.19. 29.19. Of course, in the politics of it, we're looking for the debate on Tuesday. Our coverage are 8:30. Kevin Cirilli and David Weston leading that coverage. Right now, we're going to lead over to what to do, and this is really the kickoff discussion about, you know what do you do into Q4 as we all adapt and adjust to this pandemic? Jim Paulson has a huge advantage. He's not in the 3 zip codes of Wall Street or the city in London. Jim Paulson in Minnesota with the Luthold Group. Jim, how have you changed your opinion in the last 2 weeks in this chaos we're in?
Well, I guess, Tom, I kind of look at it as, with the ferociousness of the rally off the March lows, you knew that we're going to get correction at some point. And generally corrections do their job. They scare you a lot. And I agree. This could have further to go. I really don't know. But I mean, it wouldn't surprise me if we do fall 15% from the highs at some point. It doesn't have to, but it certainly could. But I guess for me, I think there's quite a bit of fundamental economic momentum here coming into this, and I think it's likely to continue to carry into the fourth quarter and beyond. And I think that's going to eventually turn this correction a little bit. I mean, we're growing north of 30% in the current quarter in real GDP, maybe the fastest quarterly growth rate ever. And expectations right now among private sector economists for the fourth quarter, right off Bloomberg, are 5%,
right?
Which is really strong. I think it might come in stronger than that. If you just look at housing yesterday, look at the Bloomberg Consumer Comfort Index that came out yesterday. It's interesting to me. Bloomberg Consumer Comfort is in the upper quartile of its history right now.
But John Farrell, Jim is so good to bring this up as well. You know what, John? I don't see up 30% on the streets of New York. Do you see it on the streets of London?
Not really, but there is a mechanical point to be made here, Tom. You go from shutdown to reopening, the lights off, you switch it back on again. There's a mechanical improvement. It's just there. It's just basic maths. And I just wonder, Jim, what are you seeing that's mechanical, just to bounce back from being shut down to reopening? And what are you seeing that is self-sustaining? You used the word momentum. Where are you expecting the momentum to come from?
I totally agree with you, Tom. There's a big chunk of this, bounce that we've had was just turning the switch off and then back on. There's no doubt of that. But I do think that turning the switch back on creates its own momentum. I mean, we had a lot more fear when we had the switch off among consumers, among businesses, and that fear caused them to pull in spending even more, cut costs even harder. That fear is less now, in part because we allowed some things to come back on. So there's greater confidence. We still have an 18% savings rate among the household sector. Let's say they bring that back down to 12% or something over the next few quarters or something like that. If they do that, that would equate to dramatic growth in personal consumption expenditures, just that alone. And all you really need to do that is just to generate some confidence. The other thing I'd like to point out is we've already dumped a lot of stimulus on this thing, and most of that really hasn't started to help yet because it takes about a year historically before it starts to really show benefits in the economy. But as we go into the fourth quarter and into the first quarter, that 1 year lag is going to be met, and I think that will start to improve economic conditions. Look at the impact that a lower mortgage rate has had on housing activity and auto sales in this country. Imagine what the impact of 25% money growth and 15 to 20% fiscal spending, which I don't even think showed up yet, might have starting in the first and second quarter of the coming year.
Jim, perhaps the phrase of the week is a healthy correction. Pretty much almost every note that I've read has somewhere around a healthy correction in it, yours included, and you also say it won't be the last, and you reiterate the idea that we're in this bull market. You did say, however, we are refreshing valuations. What does that mean?
Yeah, you know, Lisa, I concur a little bit with your healthy correction. That's why I think maybe we have to have a little deeper correction yet, because even myself, I'm just not scared enough yet. So maybe it has to go further. And maybe guys like me will quit saying healthy correction by the time it actually is getting closer to the end. I kind of concur with that. You know, I think there's what I mean by refreshing valuations is that we're bringing down the price of the market at the same time that we're starting to bring back up earnings. I mean, earnings estimates are climbing nearly everywhere, nearly across all sectors. And right now, you've got 3,200 S&P roughly, and you got 146 1-year forward earnings estimate from the street right now. You know, that puts you back down, I think, around 21, 22 times or something. It was a lot higher not that long ago. So we are doing some damage to valuations. And as we go along further, I suspect those earnings estimates are going to come up even more. So the market might look even cheaper by the end of this year, even if it goes higher in the interim.
Jim, great to hear from you, sir. Jim Paulson of Luthold Whedon. An equity bull, I think it's fair to say, refreshing valuations a little bit with a healthy correction.
I love that.
Sounds like a recipe for a meal, doesn't it?
You gotta love it. I mean,
it's a little bit with a, you know.
You know, we don't have an opinion on this, John, but I think this is really important. I think we really try to stay on that theme, and that it's a pullback. But, John, it's just finally a 10% correction. And to Jim's elegant language, it's supposed to happen. Like in the textbooks, it's normal.
And then what happens whenever we get one? The mood swings start to kick in. I do think it's interesting, Tom, and Lisa's right to keep an eye on this, to see high yields start to break out, even with the Fed doing and saying what the Fed's been doing and saying for the last 6 to 9 months. I think that's interesting, Tom, for high yield to be breaking out to 533. The level's not drastic, but a 40 basis point move widening over a week, Tom, I think that gets your attention.
Well, let's put that into English, please. Even I'm lost on that. Lisa and John, help me here. What does that mean? Higher yields?
Yes.
That means higher yields relative to treasuries, yes.
What it means is that investors are saying that in order to take the risk of investing and lending to this company, we are going to demand a higher premium based on the rate of treasuries in order to be rewarded and compensated for taking that risk, Tom. Does that clear it up?
You know he already knows this. He already knows this.
She nailed it.
He's just winding you up.
She nailed it.
But I got to nailed it. So there you go. It's worth it.
She nails it every week. I'm just going to get to the price action. My out. Every time I get uncomfortable on this show, let's get to the markets. Equity shaping up as follows. Here's the bounce back on the S&P. Yeah, if Tom and I were married, that would be it. Every dinner.
I'm going to do that
at home.
I'm doing that at home this weekend. It's time for a market check.
Thanksgiving discussion.
What do you do on a weekend? What do you do on a weekend? S&P 500 futures in 11, down a third of 1%. Euro dollar 116.36. You know what you're listening and watching? This is Bloomberg Surveillance.
3 p.m.
With the First Word News, I'm Rishka Gupta. London has been placed on the UK's national COVID-19 watch list as an area of high concern as cases continue to soar. A group representing the Capital's councils is calling on Londoners to abide by the rules set out by Prime Minister Boris Johnson earlier this week. Those included working from home where possible and keeping to the rule of 6. Leaders across Europe are grappling with how to bring the coronavirus back under control. And London police have launched a murder investigation after a police officer was shot and killed inside a police station today. The incident happened in Croydon, south of the city. Police say the 23-year-old suspect then turned the gun on himself. He is in critical condition. It is rare for police officers in the UK to be shot and killed, which has strict firearm laws there. The last London police officer killed in the line of duty was Constable Keith Palmer, who was stabbed to death in March 2017 during an attack outside Parliament. And Paris police have arrested one person after a knife attack today that left 4 people wounded. It happened near the former offices of satirical newspaper Charlie Hebdo. That's where Islamic extremists killed 12 people in January 2015. A trial is currently underway in Paris of people accused of helping the 2015 attackers. Police aren't sure whether today's attack is related. Supreme Court Justice Ruth Bader Ginsburg today becomes the first woman in American history to lie in state in the U.S. Capitol. Ginsburg will be the first Jewish American to lie in state and just the second Supreme Court Justice. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
You see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
As the presidential candidates enter the final stretch before the election, both are pitching their diplomatic experience, but with contrasting plans. Diplomats, ambassadors, and experts weigh in on the future of U.S. foreign policy on a Bloomberg special report, 2020 Year of Crisis, Diplomatic Divide, on Bloomberg Television.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
We're not going to make it unless there's a broader reopening of the economy, unless we see more fiscal stimulus, and the end of that bridge could look a lot more, pronounced here if we don't get more support.
The wonderful Emily Rowland of JH Investments, the co-chief investment strategist, on the question that I think has dominated the debate through much of this week, stateside and here in Europe and across Asia as well. What happens on the fiscal side down in D.C. in the next several months? From New York and London this morning, good morning to you all. Alongside Lisa Abramovitz and Tom Keene, I'm Jonathan Ferro, with your price action shaping up as follows. 1 hour, 12 minutes out from the opening bell in New York this Friday morning. Already a noisy one, with equities down, back up, down 0.4. That's where we are right now, off by 12 points on the S&P. In the FX market, dollar strength the story on the week. Best week for the DXY, going all the way back to spring, back to April. Euro-dollar 116.34, down 1/3% on that currency pair. And we've talked about it every single day this week. Treasury yield 0.66%, just not doing a lot, not participating in the volatility you see in the equity market. Yields come in, Tom, not even a basis point.
And an improvement in the real yield as well. We always mention the real yield on Fridays, anticipating John's property. But John, moving from a negative 1.02, now out a full 10 basis points, an improvement to negative 0.92. What does that mean, John?
A subtle shift in inflation expectations lower. And that's something we've got to keep an eye on in the coming weeks. I think it's actually going to be really interesting to see how the market more broadly positions around that story, Tom. If inflation expectations come in and real yields become less negative, so to speak, how do we price off that for things like growth stocks? And I think that's a conversation we can have with the equity side in the coming weeks.
We're going to do it in the coming weeks. We're going to do it in 15 minutes with Yana Hatzius of Goldman Sachs, clearly our interview of the day on economics. Right now, on our politics, it is good to go abroad to get a different view. Julie Norman is at the University College London, a political science professor with wonderful cred on the Levant and the Palestinian and Israeli experience, but she joins us now on the Battle Royale in Washington. Julie Norman, calculate this weekend is the two candidates adapt and adjust to a debate 4 days away.
Right, Tom. So there's obviously a lot that's going to be going on this weekend. We expect that tomorrow that Trump will announce the next Supreme Court nominee, and that will, of course, just set off a really quite partisan battle in Washington moving into the week of the debate, with really both parties trying to double down on a lot of the key issues that will resonate for their voters. A lot of that, of course, coming on the backdrop of Trump's recent comments this week about a potential non-peaceful transfer of power after the election. So all that's going to be on the table going into the debate.
Wait, going after the undecideds, forget about changing somebody's vote, just going after the undecideds versus getting the turnout of your base. Wait that balance right now.
Yeah, so this is going to be a challenge for both parties. Right now, Trump, and continuously Trump has had a very strong following of his base, but trying to get other people beyond that into his coalition has been a challenge. But again, the Supreme Court nomination might open up a possibility there. There are a lot of conservatives, moderates who maybe don't like Trump personally, but are still pretty committed to conservative policies and values. So the Supreme Court nomination will help bring in some of those undecided voters for Republicans for sure. On the Democratic side, it's a bit more complicated for Biden, really trying to straddle a very wide range of opinions within his own party, from very strong progressives to very strong moderates, and some on both sides of that spectrum who may still be unsure about how enthusiastic they are about Biden.
Julie, we're focused on the presidential aspect of the election. However, a lot of people in the markets are saying possibly the more consequential election is for the Senate. Where are we in terms of a blue wave or a blue sweep come November?
Well, that certainly is where a lot of the focus and emphasis will start being as we get closer to November. There are a number of key seats that are up for grabs. Democrats are, of course, really trying to emphasize this point, again, with a Supreme Court nomination to suggest that if they retook the Senate, they would be open to pushing for some, really heretofore fairly progressive or, not mainstream policies, such as increasing the number of justices on the court, increasing term or implementing term limitations, or going over other policies that Democrats have been pushing for more of the progressive wing, such as ending the filibuster. So Democrats are really pushing hard for this sense of can they take back the Senate, and if so, will they be able to really leverage that into some different kinds of political power?
And there's also a question pairing that with the fiscal debate. How much would the Democrats pass in terms of a fiscal stimulus, a true stimulus, once the pandemic is over versus the Republicans? Is there really that much daylight between the two plans? I mean, is what we're seeing right now political silly season, and there's actually more convergence between Republicans and Democrats on the fiscal support side than it may seem?
I think we're going to be moving towards more convergence. Of course, there's been a bit of a stalemate since the end of August with the last real meaningful negotiations. But, I think after this week's comments that we heard from Jerome Powell and other Federal Reserve officials to Congress really underscoring the need for fiscal stimulus, we do see both parties coming back to the table now. Pelosi being open to, maybe massaging some of her initial numbers just to get some kind of deal moving forward. That's necessary for the economy, and both parties also realize that it's necessary for the election as well for some of their key seats that are up for grabs.
Julie, John emails in from Coventry and asks, tell us about the campuses. Tell us about, in the United States, we have a struggle here. I mean, the news today is Pac-10 football, Pac-12 football, whatever it is, they're going to start to play football again. And yet campuses here are an absolute mess. Is it the same thing in urban United Kingdom?
Well, that's a good question. We are actually just going back to our classes next week, so our students are actually just coming back right now. I think the UK is dealing with a lot of the same questions as the US right now, with how much face-to-face to have, how big of groups to allow students to gather in. It is a big question mark here too, but we do have students coming back to campus, and everyone's just trying to do their best to make the best year possible for them.
So that's a good question.
Julie,
Norman,
great to catch up.
That's great. It's fabulous.
Julie, thank you. Julie Norman, at the University College London.
See how she said, John, that was a
Coventry.
good question because the question came from you. I mean,
it did.
I didn't ask a good question.
UCL, just below Euston Square, Tom. I'm sure you've been there a few times.
I've been by
just to the right of that.
Yeah. I did something
went
there
a little
once.
bit further down.
Yes.
It's a nice hotel.
I'm waiting for the market check.
UCL's very cool.
I'm waiting for you guys to devolve into market check.
Don't worry about that. Don't worry about that, Lisa.
I got to admit, seriously, I never look at the
We'll
debates. This debate Tuesday night's going to be something. It's really going to be a mystery.
That's Tom's out. You noticed
That's
that this
good.
week. It's always this debate.
Well,
I think it's a big deal.
It is a big deal. It is a big
I
deal.
got wrong the Prime Minister's speech. Cut me some slack.
1 hour, 5 minutes away from the opening bell.
That's called
Here's your
radio
market check.
silence there. What we just had was radio's Al from New Jersey is going, what are they doing?
I did it deliberately.
Did you?
Get to the price action. There's your equity market, down 13, off by 0.4%. 1 hour, 5 minutes away from the opening bell. Alongside Lisa Abramovitz.
Yeah.
Tom Keen's still with us too.
Yeah.
I'm Jonathan
That'll
Ferro.
never happen again. I promise. It'll never, ever happen
Is that
again.
management?
I'm sorry. Yes, sir. I'm
right.
sorry.
Let me
Sir,
tell you, that
I'm
calls
sorry.
much longer.
has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
There is no change in policy, but there is a lot to unpack in this Fed statement.
My sense is that more fiscal support is likely to be needed.
You saw definite signs of slowing. Do you still see that?
The amount of pain we're going to have in the economy and the challenges we face to get to a full, robust recovery are just going to be much greater.
Hi, I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
From New York and London, for our audience worldwide, good morning to you all. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This is Bloomberg Surveillance, 1 hour out from the opening bell, with your equity market shaping up as follows. A bounce off the low on the S&P 500, still down by 11 points on the S&P. But things get better in the last hour, that's for sure. We're down just a third of 1%. In the FX market, the euro does stay weak and the dollar stays stronger. Euro dollar 116.31, down a third of 1% there. A breach at 117 and maybe even 116, the way this is going. In the bond market, yields come in a single basis point on a 10-year Tom to 0.65%, and crude just hanging out in and around $40 a barrel, down almost 0.7% on the day.
We'll give you the data check through all of this Friday. It started out boring, and then it became not boring about 2 hours ago. Continue to monitor that. Again, futures -11. This is an important interview for global Wall Street, and frankly, for those of you not attached to Wall Street, it is of note. Jan Hatzius has cut his teeth with Bill Dudley years ago at Goldman Sachs by focusing on the American consumer. He's done that to great acclaim as their chief economist and head of global economics with great forecasting skill. Always very cautious about the dream of higher interest rates, the dream of a greater gross domestic product. Dr. Hatzius joins us this morning. Jan, thank you for joining Bloomberg Surveillance. You guys shook the world with a markdown yesterday on GDP. If we get stimulus from President Biden or a second-term President Trump in January or February, how will you adjust?
It's good to be with you, and you're obviously being way too kind there. But in terms of the outlook, we did take down the fourth quarter because of the reduced likelihood and very low likelihood now of a fiscal deal. We were at 6% quarter-on-quarter annualized. We're now at 3% quarter-on-quarter annualized. In fact, a few weeks ago, we had considered a larger downward revision than this in the event of no deal between Democrats and Republicans, but we ended up with a somewhat more moderate downward revision in light of the fact that the end of the $600 per week payment to unemployed workers at the end of July doesn't seem to have had as large an impact on spending as we had thought. So it seems like the consumer is still holding up reasonably well, but nevertheless, a downward revision was necessary. Now, if we get into 2021 and we have another fiscal easing under President Biden with a Senate majority or under President Trump, then we would upgrade our numbers probably, because we're not really building in a significant amount of stimulus from here. We think there are other reasons why the economy may do pretty well in 2021.
Right.
They're mainly related to, COVID developments and potentially a vaccine, but we're not building further stimulus at the moment.
Yeah, and your initial acclaim came off mortgage equity withdrawal and looking at the behavior of consumers in the housing boom of 04, 05, and indeed into 06 as well. What is the behavior of consumers that you and Goldman Sachs see right now?
I think the main constraint on consumers is really the development of the pandemic. I mean, that's the reason why the economy turned down so sharply in March and April. And to the extent that we can unwind these losses, I think it's going to reflect improvements in our ability to cope with the disease, to reduce infection risk, and ultimately to come up with a vaccine. That's at the top of the list for me. But of course, income plays an important role as well, and government programs to shore up incomes during the worst part of the pandemic, I think, were extremely helpful. For me, the most amazing statistic of this entire period has been the fact that the second quarter saw the biggest decline ever in real GDP, going back at least to 1947, but also the biggest increase ever in real household disposable income. That was really key, I think, in turning around the downturn of March and April in subsequent months. But of course, this story isn't over yet, and right now we've seen a setback, it seems like, and what happens to fiscal policy as we go into 2021 is going to be important.
Well, Jan, that's the issue, and Bob Prince over at Bridgewater has talked to us a couple of times about the duration mismatch. This pandemic will go on for a whole lot longer than the 3-month band-aid that the fiscal authorities keep applying. And I just wonder, from your perspective, we managed to offset that income crisis, that income shock of 6 months ago. Do you think the nature of the slowdown changes if the appetite to apply another fiscal band-aid isn't there?
I do. I think there is a very strong case for keeping policies, both on the monetary side and on the fiscal side, very accommodative. I'm as the economic outlook is concerned these days, and I do think that we're making significant headway, but at the same time, we're clearly still very far away from full employment. The pandemic is definitely not behind us, and the economy still needs a lot of support. So on the monetary side, I would say I'm pretty comforted by global central banks' willingness to continue to provide support. I think there's a very strong consensus there that the economy is still needed. But on the fiscal side, of course, it's a more political decision, and especially in a hyper-politicized environment as what we have currently, given the impending election, it's much easier to see a setback, and clearly we have just seen a setback, and I think it would be very helpful if we could get another round of support.
What's interesting about your call, though, Jan, as you cut growth for the end of this year, you boost growth for Q2, Q4 at the back end of 2021. There's some people out there, some economists, who believe that if we don't grow quickly enough now, the potential growth in the future has to come down as well. What is it that you see that makes you think that even if growth has to come in the near term, it can pick up in the longer term, or at least the medium term?
Well, I think that if you're restoring less activity in some of the sectors that have been hardest hit, the consumer services sectors like transportation and restaurants and areas like that, that does give you somewhat more upside potential further down the road. Eventually, I think these sectors are going to normalize, especially in an environment where the pandemic is just less of a threat, perhaps because a vaccine is available and will have been broadly distributed by the middle of next year. So I think it's sort of natural to offset at least a part of any near-term changes in your growth forecast with changes in the opposite direction, a few quarters down the road. And I think in this case, that strikes us as the most likely outcome. Although, of course, there's a lot of uncertainty about what happens further down the road. And I think also that the idea that if you have a larger hit in the near term, that can weigh on your ability to restore activity much further down the road because of scarring effects. There's something to that as well, but I think that operates on a somewhat longer horizon, probably.
Jan, let's build on this, because when you talk about the potential for faster growth in 2021, even as we see slower growth now, that also flies in the face of the market's expectation for inflation. One market aspect of this week's action has been a steady drip lower in 5 to 10-year inflation expectations. Do you think that the market is wrong and that the Fed is right in thinking that they can get 2% inflation in the near term?
Well, the Fed doesn't have 2% inflation for at least the next couple of years, so it still takes a while. And I would agree with that. I think we'll be below 2% for core PCE inflation for the next several years. However, right now we're at 1.2% for core PCE inflation, and I think a significant part of the gap between that 1.2 and 2 is probably related to more temporary factors, basically distortions or disruptions rather in the most COVID-affected sectors. I think that is going to unwind over the next year. I think that is going to push inflation higher, but maybe to the 1.5 to 1.75% range. So you're still below where you would want to be and what would be needed for the Fed to even think about hiking rates. But I don't think you're going to be quite as low as where we are now. As far as markets are concerned, inflation markets in particular, yes, I mean 10-year CPI inflation expectations or break-even inflation rates of 1.6%, that does strike me as low, and it's moved lower, as you say. And so I would say I'm disagreeing a little bit more strongly with market pricing on these break-even rates than I did, say, a couple of weeks ago when it was a bit higher. I think there's some upside there.
This is crucial, and this is one of the most heated debates on Wall Street. BlackRock coming out and sort of speaking to the debate that John and Tom were having earlier about the rejiggering of supply chains in the wake of the deglobalization and how that alone could really increase inflation perhaps more than markets are expecting. Why is that not a thesis that you follow based on your expectation for 1.5 to less than 2% in the near term for inflation?
I think it's a factor. I mean, I think it's going to be potentially a factor for the goods sector of the economy. But I also would say that the service sector is significantly more important, accounts for 70% of the basket. The goods sector only accounts for about 30% of the basket. And also the potential impact of changes in supply chains, I think, is going to be spread over a period of time. I don't think it's something that is going to have, a huge impact in the very short term. But what does have much bigger effects in the very short term, I think, is these distortions or disruptions that we're seeing in COVID-affected sectors, which are probably going to unwind more quickly. So, I think both of these factors are probably reasons to expect somewhat higher inflation, but I think the disruptions are more important.
Jan, when did you last wear a tie?
March. I have not worn a tie since March, but I am now wearing a suit jacket. So that's I think a gradual adjustment to the pandemic.
Jan Hatzius of Goldman Sachs. Tom, I don't know what I think of this. The new trend on Wall Street of no ties.
I like the trend of the beard.
Feel a little bit naked.
I mean, I got a lot of people lobbying,
I'm into the stubble. Should we see what the no tie thing looks like?
Ooh, look at this. And by the way, it's not a skinny tie. I learned it's a slim tie.
This is a slim tie.
Yeah.
This is a slim tie. Just have,
It doesn't look right, John. No. Put it back on. Oh, really? Tom, we're doing that again?
We're doing this on radio?
I think this might work.
Taking ties off on radio.
On social.
On radio,
I like Tom without the bow tie. I mean, I've been with Tom on the weekend, and Tom still wears a bow tie. I don't.
While he jogs
wear
up the hill.
Tie.
It works
to get to those markets.
Yeah, let's do the markets.
To get to those markets.
Yes.
Equities bounced back, down 13 on the S&P, negative 0.4%. This is Bloomberg.
Good morning.
With the First Word News, I'm Ritika Gupta. China is hoping to produce more than 1 billion doses of a coronavirus vaccine next year. That follows an aggressive government support program for the construction of new factories. China has 11 vaccine candidates in human trials. 4 of them are currently in the 3rd and final trials. Russian President Vladimir Putin is calling for an agreement with the United States to promise not to engage in cyber meddling in each other's elections and internal affairs. But U.S. officials say the Kremlin has already tried to interfere in November's presidential election. Bloomberg has learned that Russian officials are growing increasingly worried about the prospect of a Joe Biden presidency and what that would mean for sensitive issues, including nuclear arms. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
The scale of the climate crisis is just staggering, but you can't let that be an excuse for doing nothing. So, to fight climate change, we can't be overwhelmed by the seeming impossibility of the task at hand.
Inclusive multilateralism is about bringing more voices to the table, resulting in more ideas, more solutions, and more climate action.
As a signatory to the Global Covenant of Mayors, Charlotte has joined thousands of cities and regions in a commitment to accelerate ambitious, measurable climate and energy initiatives.
Local communities across our nation are stepping up in unprecedented ways to respond to the ongoing challenges of our climate crisis.
We'll see what is the cost, what is the reliability, but without innovation, a lot of innovation, we won't be able to get there.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
The problem right now is that the lagged effects in the economy are still playing out. We don't have to torture the data's torturing us.
Quote of the week from Ethan Harris, Bank of America Securities Head of Global Economic Research. We'll continue this conversation. We'll do that with Mohammed Al-Arian of Bloomberg Opinion. And Tom, I guarantee that man will be in a tie for that interview. I've got to step away and go and put my tie back on as well.
I did not need a mirror, folks, to put my tie on. For those of you on Bloomberg
I need a mirror just to get the length right.
I'd like to thank
Burberry do theirs just a little bit longer, Tom.
Well,
So
that's okay.
It's difficult to
the hipster
get it in sync.
will figure out the tie as well. John Farrow with an important conversation with Dr. Al-Arian that's coming up as well. Right now, we've had a ton of emails on this, on gold and the dynamics, and Dennis Gartman, of course, has been brilliant on gold. With a recent pause, Michael McGlone at Bloomberg Intelligence every day puts together real insight with charts that have 2 and 3 and sometimes even 4 lines on it. Michael McGlone, the great correlation on gold that's missing is the blowout in our debt, and frankly, the dynamic, the blowout in the deficit as well. Is that correlated with gold?
Yes, hello, Tom. I know you love my multi-axis charts. I have to control myself there. But the key thing I think people remember about gold is compared to the big increase in U.S. debt to GDP this year, gold is basically unchanged this year. It's not really up a lot. It's unchanged since 2007. So to me, gold is doing what it's supposed to do. It's keeping up with debt to GDP, but at some point it's going to accelerate. And unless you expect debt to GDP and QE to go down, gold has to appreciate. It's just a matter of time.
But going back to Heilbronner here, and this is really, really important, is the distinction between the level of debt and the growth of the debt. Which is it that links to gold?
Well, there you go. It's the level and the growth, both. Most notably, the growth is when the growth of debt really picks up like it has this year. Let's look at this year. We're about 140% debt to GDP. Last year, we were about 110. So that massive pickup is what happened in 2008. Now, gold initially had its bounce, its dip, and then it catches up. So I think it's in the catch-up stage. Obviously, just made an all-time new high. A little bit overbought in the short term, but just give it a little more time. It should continue that rally. Remember, gold's in a nascent bull market and had a very long period of disdain and underperformance. And then compare that to the other side of the aisle. The stock market's in a really extended bull market that's been around for a while and it's getting old.
Mike, I love talking with you because you are one of the only people who will say I have to control myself about the multi-access charts that I have. And yet, here we are, Mike. When we talk about gold, we have to also talk about real yields and how negative they are. A lot of people saying that negative real yields was what was pushing a lot of people into gold. Real yields have actually gotten less negative. How much is this the real story behind the gold weakness?
Well, that's the key story, but I kind of look at that with a bit of a grain of salt. Real yields are reflecting the fact that CPI and most inflation indices are very much lagging. They will catch up, and they're going to zero. It's just a matter of time. That's where they're heading. Bond yields have been going to zero for a while. We started in Japan, then we had Europe, and now we have the U.S. To me, it's just a matter of time. What it's going to take to end that, I don't know. And the key inflection point I'm worried about to get to negative yields in this country is a bear market in the stock market, which someday we have to have if history is a guide. Now, we haven't had that since 2011, or since 2009, where it goes down and stays down for a while. So I'm worried that's the next keen thing I'm looking forward to, unfortunately, for gold to peak, and I don't see it for a while.
All right, Mike, if we see this bull market in gold continuing, as you say, the path matters, especially for people looking for a ballast to their 60-40 portfolios that appear perhaps antiquated with yields as low as they are. Based on moves, gold has moved in tandem with equities. Will that continue?
Well, let's look at it on a year-to-date basis. S&P is unchanged, and gold's up about 23%. Bitcoin's up almost 50%. So depends on how you look at it. It's how you look forward for the next 5 or 10 years, and I see the better value with debt to GDP at all-time highs, QE only going up, and the stock market at the highest level versus GDP ever. That I have a sense we're going to see some flows going back towards the metal. Remember, gold used to be a big portion of portfolios back in the 70s and 80s. It's probably going to go back that way with just the normal cycles.
Michael, one final question. I got to go back to Dr. Copper, and of course, closely linked to Australia and particularly to Chinese dynamics as well. Copper's been what we call red zone, green zone for, I'm going to say, 4, even 5, even 6 years as well. Is copper tradable now, or is it trending?
Yes, well, it's trending. It's been a bear market, but Tom, I think we're very close to an inflection point. Copper right now has the highest correlation ever on a 52-week basis to the NASDAQ, to the stock market. So that's been what matters. If the stock market really goes down, copper will go down. But just this last few weeks, despite the stock market correcting from the highs, copper is doing very well, right around $3 a pound. So I suspect we're near that inflection point where, looking forward, it's really, from a commodity standpoint, the metals that are really attractive to me because of demand, and a lot of it is decarbonization in energy means more demand for all the metals: silver, copper, cobalt, nickel, all those.
Michael McGlone, thank you so much. An update on commodities with Bloomberg Intelligence. Lisa, this is so important, and it goes to within, the day-to-day gloom and gloom cells in the media and that. But Lisa, to me, it's incredibly important that there's glimmers of real entrenched optimism out there across all of the asset classes.
Yeah. I mean, honestly, I've seen less optimism than we did 3 months ago.
Oh, yeah, this week has been brutal.
This week has been brutal. And I really think that people are not fully understanding the implications of no fiscal support plan in Washington. As that becomes more of a reality, there is a huge divergence of how big of an effect that will have short-term and near-term and long-term. Jan Hatzius talking about how he's upgrading his expectation for next year. That's not the consensus, Tom.
No, he's definitely more optimistic than others. I would point out, folks, that Kevin Cirilli making very clear the non-stimulus right now is decidedly a moving target as the Democrats figure out what to do in the House, whether those challenged Democratic races can convince Speaker Pelosi to bring that number down closer to the Republicans as well. Lisa, I thought the observation on high yield giving way was really important, a higher relative yield in the high yield market. What's the issuance look like in investment grade and high yield debt?
Unprecedented. I mean, it's just been going bonkers. That's the technical term for it.
Bonkers, very good.
This
I like
week,
that.
this week,
you nailed that.
Yeah, thank you. Trying to nail it every day for you, Tom. I will say that we did see the high yield bond issuance break a new record this week. And really, my question again is, are they building a bridge to the other side or building a bridge to nowhere? And you had Steve Mnuchin testifying to Congress yesterday saying, they don't need more debt. What they need is just sustenance to get them through the pandemic. They are putting on more debt, which will slow growth going forward?
We've got a very busy weekend of reading here to get ready for Q4. We launch into that next week. And, of course, the historic debate on Tuesday. Before Tuesday, we have a lengthy Monday in store. We'll start Bloomberg surveillance early. And then look Monday afternoon for a remote. Lisa Abramowitz at Jack Doyle's bar watching Arsenal play Liverpool. It's sort of like Monday Night Football, except the time zone's great. You could take the kids, Lisa, and down at Jack Doyle's with all the Arsenal gooners.
So what do you do since you're my enemy? I mean, do you sit there with
It's
the tots?
not tots, it's Liverpool. Tots have nothing to do with this.
I know, but we're your enemy, Tom. So do you sit there and sort of boo us quietly from the corner?
No, I can't. There's so many of our guests that are Arsenal fans that I can't be rude like that.
I'm sure that stopped you before.
I save the rudeness for Pharaoh. We thank you for listening to Bloomberg Radio and watching Bloomberg Television. Coming up, a lot of good conversations. Look for Mohammed Al-Arian with John Farrell. Have a great weekend. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York and London for our audience worldwide, good morning, good morning. The countdown to the open starts right now. 30 minutes to the opening bow with equity futures bouncing off the lows and down just 8 points. We begin with the big issue. Investors trying to handicap one thing.
U.S. fiscal stimulus.
Fiscal stimulus.
Fiscal stimulus.
The odds of fiscal stimulus, have gone down quite a bit.
The window for that happening before the election is closing really rapidly.
It might not happen at all before the election.
The fiscal package is basically dead now with this battle over the Supreme Court.
Appointing a new person to the Supreme Court.
Normally, a Supreme Court vacancy wouldn't be a market issue.
That's going to be really contentious, bringing forth a lot of resentment between parties.
Before RBG's death, the dialogue was disintegrating.
The political heat is just perhaps too high, making it even harder for Republicans and Democrats to actually get to a deal.
Now it's really hard to sort of visualize how that comes together.
And then quickly, we get some optimistic talk from both sides of the aisle. Treasury Secretary Steve Mnuchin saying the following: if the Democrats are willing to sit down, I'm willing to sit down any time for bipartisan legislation. Let's pass something quickly. And House Speaker Nancy Pelosi saying this: we're ready for a negotiation. I'm talking with my caucus and my leadership, and we will see what we can do. This, as Bloomberg reports, that House Democrats have started drafting a stimulus proposal of roughly $2.4 trillion that they could take into possible negotiations with the White House and Senate Republicans. While smaller than the $3.4 trillion package the House passed in May, it remains much larger than what Senate Republicans have said they could accept. Joining us now from Washington, D.C. is Bloomberg's Kevin Cirilli, our chief Washington correspondent. Kevin, you've almost got to laugh. I'm ready to talk. I'm ready to talk. Then the Democrats are going to go away and pass a $2.4 trillion bill. Ready to talk's one thing. Are we actually facing some real negotiations here or not?
No. Look, I think that if we're 39 days out from an election, I think Senator Ben Cardin, a Democrat from Maryland, really put it bluntly yesterday when he said that it's unlikely that there will be fiscal stimulus before the election. However, I think there's one caveat to that, Jonathan, and that is if President Trump feels that a stimulus negotiation or a passing of a stimulus would boost his election chances. And I would put that at the end of October, which is incredibly, incredibly unlikely given the dynamics of the calendar in the House of Representatives. I think back to several election cycles ago prior to the 2008 election when lawmakers facing an economic calamity reconvened in Washington, D.C. So there's, that oddball chance that could happen. After November, based upon the conversations I have, based upon the reporting that I do, Jonathan, I don't think the Supreme Court impacts at all lawmakers and policymakers' ability to get a fiscal stimulus deal. And here's why. Just days after the passing of Ruth Bader Ginsburg, the House of Representatives came to an agreement with the White House and around the same time, rather, for the continuing resolution, keeping the government open until December 11th. That creates another government cliff, and that really provides the momentum for both sides to come together to advance a deal by the end of the year. Because remember that many of these fiscal stimulus programs expire at the end of this calendar year.
Kevin, the situation for me is as follows. What's important right now are the people in the room. And what we saw when they tried to negotiate this through the summer was the White House Chief of Staff, Mark Meadows, complicate things in the view of many people from the outside looking in. Can you walk me through the role of Mark Meadows in these conversations down in D.C. at the moment?
Well, the President's Chief of Staff is one of the founding members of the ultra-fiscally conservative Freedom Caucus, and he has deep ties to many conservative members in the Republican Party, especially in the House of Representatives. Him and Speaker of the House Nancy Pelosi have a storied history in terms of their clashes prior to him joining the administration. Secretary Mnuchin has been seen for many years as much more of a moderating voice within the administration, especially as it relates to negotiating with Speaker Pelosi. But I go back to after the November elections, which is, I think, that the window gets wider between November 4th and December 31st. And I think that for someone like Mark Meadows, his influence in those negotiations diminishes, especially if there is an impetus to really in a lame duck session in which many members won't have to have if they're voted out of office, won't have the calculation of trying to appease either flank of their party, I think it gets a lot easier for them. And again, I would just hammer home this point. I think it's divorced from the Supreme Court process.
Interesting take. Yeah. Not the take on Wall Street, I have to say. Kevin, great to catch up. Tremendous reporting, and looking forward to the coverage next week with that first debate kicking off next week. Let's get to the price action, shall we? 25 minutes away from the opening bow, shaping up as follows. On the S&P 500, we bounced back. We're down just 0.2%. In the bond market, treasuries doing a whole lot of nothing. Yields coming about a basis point of the 10-year to 0.66%. Interesting one in the FX market. Biggest week of dollar strength we've seen going all the way back to spring. Euro dollar with a break of 117. We come all the way in on euro dollar down towards the level of 115, just north of that, at around about 116 at the moment. Two stories, not just the fiscal package, but also the shakedown, the breakdown that we're seeing take place in Europe this week. Mohamed Al-Arian warning about the economic fallout from the coronavirus, tweeting the following in the last week: what's happening in Europe is a timely and important reminder for all of us trying to assess and project the economic, distributional, social and behavioral aspects of the COVID shock. Rather than a one-round dynamic, as initially modeled by many, it's a multi-round shock with a long tail. Mohamed joins us right now. Mohamed, lucky to have you with us this morning. Let's just start right there. Bob Prince of Bridgewater talked about this. I mentioned it earlier on this morning. The duration mismatch between the length of the pandemic, how long this would go on for, and the band-aids we keep applying. 3 months here, 3 months there on the fiscal side. Mohamed, could you speak to that and the complicating factors for this economy?
Yes, John, I think everybody went into this shock in March thinking it was what game theorists call a one-round shock. And it turns out it's not. It's a multi-round shock. And as you play a multi-round process, a few things are happening, and we see it. The political willingness to do more fiscal stimulus comes down. The ability of some countries, think of developing countries, to do so comes down. And then on the household sector, adjustment fatigue goes up. People are fed up. People want to do things differently. So this becomes more and more complicated the longer it proceeds. And that's why we have lost already two important drivers of the market. We've lost the driver of optimism about the economic recovery. Very few people talk about a V-shaped recovery now. In Europe, they talk about a double-dip recession. And secondly, we've lost the strong driver of fiscal policy. So we rely on liquidity, and that driver is also weakening, and it lacks conviction.
So, Mohamed, does all of that speak to a higher volatility regime? It's been amazing to me to see the price action this week. Gap lower aggressively so yesterday morning, this time yesterday, then bounced back within the space of about an hour. Equity futures doing the same thing this morning on basically nothing. Do we have to get used to that, Mohamed?
We do, because the buy to dip, while it's still there, it is present, is not as strong. And on the other side, those willing to test market valuations have a lot more courage. So we are going to see this. And yesterday was a perfect example. Throughout the session, the U.S. session, we saw that incredible dynamic, this tug of war. And I suspect we're going to see it for a while.
Mohamed, got to ask you the portfolio construction question. It's the question of the moment. What's the role in treasuries right now in portfolios? A 10-year at the moment coming at a single basis point. We saw this multiple times over the last week, where you get a downdraft in risk assets, even seeing what's happening in high yields, some cracks there too, and treasuries just not responding, Mohamed. How are you thinking about treasuries as a component in a broader portfolio at the moment?
I mean, you've heard me say that risk mitigation has become really difficult in this environment. You put it really elegantly an hour ago when you said, look how much has happened to the stock market since the beginning of the month, and yet 10-year yields have only come in 6 basis points. If you are looking for government bonds to give you that protection, that hasn't happened so far this month. And it speaks to this complexity and this notion that, Tina, there is no alternative to stocks, but stocks are too expensive. And I really do feel for a lot of investors there that are in the 60-40 mindset, it's getting really hard.
So, Mohamed, you have a couple of decisions to make if you're putting a portfolio together. And you can walk me through some of the options, but I can just label a couple of them right now. You can either accept lower returns and de-risk the portfolio because you haven't got that offsetting factor in the portfolio anymore, or you can accept more risk, accept more volatility, and accept there's going to be shakedowns, but try and hold on through it. What do you do, Mohammed? Is there something in between?
There is, but the choice you put forward, Jonathan, is the reality for most people. For the sophisticated people, they have a much bigger distribution. So you talked basically about public markets. That's what you talked about. If you have access to sophisticated tools, you can go beyond. You know, there are some really attractive opportunities in structured credit and distress, and there will be more. The real difficulty is if you're just limited to public markets, and then at this point, you've got to ask yourself, which mistake can I live with better? Because this is a very uncertain environment right now. We have no anchors to this market. The liquidity anchor has weakened, and neither the economic nor the fiscal policy anchor is there.
Mohammed, it's great to catch up this morning. I know you're super busy and almost completing quarantine as well. The 2 weeks is almost up. Good luck at Queen's College, Cambridge. Looking forward to what you're going to be doing over the next several years. Mohammed in there of Bloomberg Opinion, and a long list of other places as well. Let's get to the market desk, shall we, and get a look at some of the movers with futures just about to turn positive. Here's Abigail.
Well, John, let's take a look at a few big name movers that are in fact driving the futures trying to turn positive, and the NASDAQ 100 actually doing that, starting out with Norwegian Cruise Line popping sharply higher on an upgrade to overweight at Barclays. The analysts there saying there's an inflection point, get into the cruise line stocks. Tesla trying to put up a second big up day in a row after the sell-off earlier this week on the battery day disappointment. And then the big one, John, Apple, earlier down 1% in the pre-market, now down up 0.8% as Katie Huberty over at Morgan Stanley is saying to buy this stock ahead of the iPhone launch. And that 4-day chart right there of Apple, John, shows you the whiplash, the whipsaws, the volatility we've seen this week. This is the key going into the last day here. If you can believe it, right now, Apple is on pace for its first up week in the month of September. It will be the key to the broader markets on the day, John.
Abigail, thank you. This market all over the place. Up next, Europe's biggest economy struggling to bring the coronavirus back under control. That conversation coming up next with UBS's head of multi-asset strategy, Evan Brown. That conversation's just around the corner. Futures recovering. Europe still down hard. The DAX off by about 1.5%. You're watching Bloomberg TV.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Lifting of some of the restrictions during the early summer has led to what we have continuously cautioned against, an increase in cases. In some member states, the situation is now even worse than during the peak in March. All member states need to roll out measures immediately and at the right time, at the very first sign of potential new outbreaks.
The European Health Commissioner warning the EU is facing a decisive moment in its fight against the coronavirus, with cases spiking across the continent. Bloomberg's Guy Johnson back with us for more. Good morning, Guy.
John, in terms of the restrictions we are seeing, they are being tightened across Europe. The case count is beginning to climb. France now has 16,000 daily new virus infections. In the UK, we are seeing the restrictions being widened. We are seeing some of the South Wales cities, Cardiff, being put under increased lockdown. Over in France, it seems that Marseille is the epicenter of the crisis, and we are seeing businesses, as a result, resisting that. In fact, businesses and the pushback against the restrictions, John, are growing. We're certainly seeing that in Madrid. The government in Spain has asked Madrid to tighten its restrictions, but the country has limited power because the local government is saying, actually, do you know what? We are not going to do what you are asking us. So there's tension now growing as a result of the economic impact that is going to be substantial, John. And that is really what governments have got to figure out what to do next. We're certainly seeing a high level of resistance down in Marseille, in France, and even here in the UK, a number of members of the Conservative Party are pushing back very strongly against what they regard as the government's high-handed approach to this crisis.
Story of the moment for Guy Johnson with Alex Steele coming up in around about 44 minutes' time right here on Bloomberg TV. Right now on the screen, the equity market breaking down in Europe. The DAX off by 1.5%. You saw what was happening with the banks over in Europe. Painful. That's the continent. What about the United States? Some people might tell you things are still okay. It looks that way. The high-frequency data, though, telling a different story. Maybe a little too premature to say anything with conviction, but looking at the numbers, here's Bloomberg's Michael McKee. Morning, Mike.
Morning, John. I'm going to be the least accurate economic or stock analyst that you have on this program, but I think it is fair to say that we are seeing headline volatility in the markets as people react to this new data, which is so weird in a time when we don't have anything going on in the world. Signs of an economic slowdown becoming more apparent. We had durable goods orders slowing this morning, and then the high-frequency data you mentioned, the weekly, daily stuff that economists are trying to follow to get a real-time picture of the economy, shows things slowing as well. Take a look at a chart here. You're looking at restaurant bookings, mobility, and air travel. They move up slowly, but move up into a spike on the Labor Day weekend, then drop off. Maybe the kids are back in school, people buttoning up, hard to know, could be a blip, but right now the trend is not good. Of those, that was not the right chart there, but of those lines, the airlines is the ones that we're following most closely because they are facing a October 1st deadline when they are threatening to lay off tens of thousands of workers. Jobless claims got a lot of attention on Wall Street yesterday. They ticked up again. Now, there are questions about their accuracy, but look at the levels. They're still really, really high. JP Morgan Chase, Goldman Sachs, their economists cutting their fourth quarter growth forecast because of all this. And finally, investors seem very much on board with Jay Powell and the Fed. Powell spent much of the week up on Capitol Hill saying it's all up to the virus, and the virus seems to be gaining ground in the U.S., John.
And very much so in Europe as well. And Mike, great work as always. Michael McKee there, thank you. UBS's Evan Brown joins us now. Evan, great to get you with us back on this program. Can we just talk about the high-frequency data just for a moment? I think Mike would concede, and many other economists would as well, that it's too early to really spot a big trend, but it's there, that little kink in the chart. Evan, what does that number, those data points, mean for you?
Yeah, so we certainly pay attention to those numbers and those data points, and we do want to see if this kind of leveling off of mobility and high frequency activity, not just stalls, but if that starts to move materially lower. We're not really seeing that yet, at least not in Europe, not in the U.S. I think this is instructive because we saw this happen in the U.S. in the middle of this year, right? You had a big increase in virus cases, and mobility wasn't necessarily moving higher, activity wasn't necessarily moving higher, but we withstood it, right? And there wasn't a reversal in activity, and so there is kind of still this underlying resilience that I think is the case in the economy. targeted restrictions as opposed to severe March, April style lockdowns within both these regions.
Evan, what's interesting about this moment, though, for you guys and your team is that you're not particularly looking at the United States, much more constructive on EM as cyclicals and what's happening elsewhere. Why is that the case, Evan?
Yeah, so I mean, what we do, we're always looking for the asymmetric risk reward. So let's say we're all focused on the downside scenario. Let's say things go right. We are getting closer each day, each week, each month to a vaccine. Over time, you're going to see a normalization of the global economy, notwithstanding some headwinds in the fourth quarter here. So what has retraced the post-COVID drawdown the least? It's been EM, particularly EMFX. So with this improvement, EM has the most room to move to the upside, and I think has some margin of safety to the downside. You also see more broadly, right, China's credit impulse has been very strong. We know historically that with a lag, that filters through to the rest of emerging markets. A lot of emerging markets are, the COVID story is getting less bad. So, that is it moving to being less of a headwind. And you've seen a lot of policy easing within emerging markets, which with a lag takes effect. So even as we see the global economy lose some momentum here, it is broadening out, and more of these emerging markets outside of China are starting to participate. We want to participate with that in the market.
Evan, just one piece to throw in there. How does foreign exchange and the dollar's role in this call fit in?
The dollar's role is absolutely crucial, and our view is that the dollar goes down and is in a downtrend over time. Obviously, we've seen a tactical or a positioning-led rebound in the dollar of late. I think real yields have risen. That supported the dollar. It's a well-held trade that it's going lower, but we do see this as something short-term. We are not. Some are questioning Fed's credibility messaging. We have little doubt that the Fed will be there to limit real yields from rising too much if they need to, extending the duration of their asset purchases. They have plenty of tools that they can use to do that. And so over time, it's going to be really hard to outdove the Fed for other central banks to do so. It's still an overvalued dollar. And so we have this positioning limit adjustment, but then, in general, I think the downward trend of the dollar is something that is going to resume, and clearly, as you say, that will play an important role in this call on EM.
Evan, it's good to see you. You look well. Send my best to the team, won't you? Evan Brown of UBS on the latest, pushing it back against the view in the US dollar that we've seen through much of this week. The dollar heading for its best week since April. Dollar strength the story. Euro dollar down to 116.29, off by 0.4%. Coming up, the analyst action you need to know. That'll be next in our morning calls. And then later, around the opening bell, BMO's Brian Bowski. Looking forward to that conversation from New York and London this morning. Good morning. For our audience worldwide, this is Bloomberg. 5 minutes away from the cash open stateside in New York City. Equity futures down 11 on the S&P. We're negative around about 1/3 of 1%. That's the price action. Here are the morning calls. A look at some of the analyst recommendations on Wall Street this morning. We begin first up with Credit Suisse, upgrading General Mills to an outperform following quarterly results. The analyst expecting the eat-at-home trend to continue, providing a long-term boost to revenue growth. That stock positive 2%. His second call is from the team at Deutsche Bank, upgrading Cardinal Health to a buy, a $61 price target. The analyst citing a compelling valuation and stable pharmacy business amid the pandemic. That stock also up by around about 1.8%. And your third and final call, it comes from the team over at Barclays, upgrading Royal Caribbean to